नशे की ये बरसात नशीली ले नशा मेरी जान मेरी जान मेरी जान मेरी जान मेरी जान मेरी जान कम गहरा नशा पैमानों का हो मेरी आंखों से कम गहरा नशा पैमानों का इनमें ही तो डूबना चाहे दिल मेहमानों का तेरी खातिर है तोड़ा ये ख्वाब दीवानों का है मेरी जान मेरी जान मेरी जान मेरी जान मेरी जान मेरी जान
The pressures around inflation, getting inflation back to target is a key priority. Higher prices leading to higher rates, and so the inflation conundrum here in the UK, of course, pronounced, and we're seeing that reflected in higher wages, but wages still, when you take into account inflation, in negative territory. So we'll be keeping across that for you as the Bank of England governor continues to give testimony, saying the poorest will be hit hardest by rates and inflation. OK, let's get your Bloomberg Business Flash now with Leanne Gerrans. Leanne.
Tom, good morning and thank you. Apple has dropped its mask requirement at most retail stores across the US following reduced COVID-19 cases and changes in local mandates. The iPhone maker is also ramping up for the return of its in-store classes. The company has updated its website to reflect which locations are no longer requiring face coverings. Apple's workers will still have to wear masks. Now, Rio Tinto, the world's top iron ore producer, has said annual profit almost doubled to a record, driven by a strong demand from China. Underlying earnings were $21.4 billion in 2021, up from $12.4 billion in the prior year. We'll be speaking to the CEO Jakob Stolzholm later this morning. And that's your Bloomberg Business Flash. Tom.
Leanne, thank you. Coming up, carrots and sticks, we take a look at Goldman Sachs' plan to hang on to top talent. That is the subject of today's Big Take. That is next. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about
थक हार गई मैं जो सहार गई मैं कर तेरियां कमियां ते जो विचार गई मैं थक हार गई मैं जो सहार गई मैं कर तेरियां कमियां ते जो विचार गई मैं रब आखदा सी मैनू रब काफी तेरे कोल रब आखदा सी मैनू रब काफी तेरे कोल वे जा तेरे गुनाह दी नहीं माफी मेरे कोल वे जा तेरे गुनाह दी नहीं माफी मेरे कोल सजना सानू पता चल गया तेरा रोशन साडी जिंदगी दे विच कर गयो कुप हनेरा वक्त बीतया ते सजना सानू पता चल गया तेरा रोशन साडी जिंदगी दे विच कर गयो कुप हनेरा वे मैं कुछ भी ना बोली सहंदी रही तेरे बोल वे मैं कुछ भी ना बोली सहंदी रही तेरे बोल वे जा तेरे गुनाह दी नहीं माफी मेरे कोल वे जा तेरे गुनाह दी नहीं माफी मेरे कोल
तेरी होके देख लिया फिर रोके देख लिया जुल्म तेरे इश्क दा मैं हंस के सह लिया मेरी वफावा ते तो होया ना संभाल पुछया नी चंगा मेरा हाल वे करी क्यों तू बताए हो पुछड़ा सवाल वे सुन बेवफाइयां तेरियां ने मेरे नाम वे
वो भी आलम समझ ना पाया दिल दे चा तू मेरे सोच गया क्यों मेरे वर्गे मिलने लोग बथेरे वो भी आलम समझ ना पाया दिल दे चा तू मेरे सोच गया क्यों मेरे वर्गे मिलने लोग बथेरे मेरे प्यार नू तू गया कातों पैरां विच रोल मेरे प्यार नू तू गया ਕਾਤੋਂ ਪੈਰਾਂ ਵਿੱਚ ਰੋਲ
Se ha visto a un sospechoso con una chaqueta marrón con cabello largo y rizado en el área de Málaga. Mantenga sus ojos abiertos.
ਓਏ ਜੱਟ ਦੇ ਬਲੱਡ ਚ ਪਿਆਰ ਖੋਲਦਾ ਬਿੱਲੀਆਂ ਬਰਾਉਨੀ ਅੱਖਾਂ ਨਾਲ ਬੋਲਦਾ ਜੱਟ ਦੇ ਬਲੱਡ ਚ ਪਿਆਰ ਖੋਲਦਾ ਬਿੱਲੀਆਂ ਬਰਾਉਨੀ ਅੱਖਾਂ ਨਾਲ ਬੋਲਦਾ ਰੱਖੇ ਪੂਰਾ ਐਟੀਟਿਊਡ ਥਾਣੇਦਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਡੋਲਚੇ ਗਵਾਨੇ ਆਮ ਕਰਤੇ ਡੋਲ ਟੱਪ ਰਹਿੰਦੀ ਮੁਟਿਆਰ ਵੇ ਅੱਖਾਂ ਵਿੱਚ ਲੋੜ ਮੈਂ ਬਲੀਨ ਰੱਖਿਆ ਵੇ ਤੂੰ ਵੀ ਰੱਖਣਾ ਏ ਲੋੜ ਹਥਿਆਰ ਵੇ ਡੋਲਚੇ ਗਵਾਨੇ ਆਮ ਕਰਤੇ ਡੋਲ ਟੱਪ ਰਹਿੰਦੀ ਮੁਟਿਆਰ ਵੇ ਅੱਖਾਂ ਵਿੱਚ ਲੋੜ ਮੈਂ ਬਲੀਨ ਰੱਖਿਆ ਵੇ ਤੂੰ ਵੀ ਰੱਖਣਾ ਏ ਲੋੜ ਹਥਿਆਰ ਵੇ ਲਾਈਮਲਾਈਟ ਰੋਬ ਤੇਰੀ ਸਰਕਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਤੇਰੀ ਪਰਸਨੈਲਿਟੀ ਦੇ ਚਰਚੇ ਹੁਣ ਨਾਰਦੇ ਹੁਸਨ ਦੀਆਂ ਗੱਲਾਂ ਵੇ ਅੰਬਰਾਂ ਦੀ ਹਿੱਕ ਨੂੰ ਇਹ ਟੱਚ ਕਰਦਾ ਉੱਡੇ ਚੁੰਨੀ ਦਾ ਬੁਗੇਟੀ ਵਿੱਚ ਪੱਲਾ ਵੇ ਤੇਰੀ ਪਰਸਨੈਲਿਟੀ ਦੇ ਚਰਚੇ ਹੁਣ ਨਾਰਦੇ ਹੁਸਨ ਦੀਆਂ ਗੱਲਾਂ ਵੇ ਅੰਬਰਾਂ ਦੀ ਹਿੱਕ ਨੂੰ ਇਹ ਟੱਚ ਕਰਦਾ ਉੱਡੇ ਚੁੰਨੀ ਦਾ ਬੁਗੇਟੀ ਵਿੱਚ ਪੱਲਾ ਵੇ ਰਣਬੀਰ ਸਾਡੇ ਨਾਲ ਟੌਰ ਤੇਰੀ ਕਰਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ ਹਾਈ ਵੋਲਟੇਜ ਗੁੱਸਾ ਮੇਰੇ ਯਾਰ ਦਾ
Politics is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We came into the year thinking that this was going to be a very tumultuous year, and you throw in the Russian-Ukraine tensions, and now, you know, seriously, every single headline is creating an aggressive move.
Vladimir Putin is somebody who we've known for a very long time, has very strong views on Ukraine. Can he be deterred, I think, is the question that many of us are wondering about.
The base case scenario is to find some sort of a compromise through sanctions that won't be too aggressive.
I don't think Fortress Russia could necessarily handle the full salvo of Western sanctions.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Wednesday, February 23rd. Our top stories today. President Biden's first round of sanctions on Russia lands with a thud. Markets respond with a shrug, and Congress demands that the president does more. Even bulls are ready to change their outlook now. The S&P 500 is down more than 10% from its record high at the start of the year, and commodities investors are waiting to see what happens next in Ukraine. Plus, Goldman Sachs plays hardball. The firm isn't just paying biggest bonuses to keep executives from leaving, it's also turning the screws on those who do. Lots to discuss this morning, then welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Matt Miller and Kayleigh Lyons in New York. And I suppose emphasising the downsides there and what many people see as the downsides for markets from here. Kayleigh will have further analysis of that. But for today, if you look at the sanctions environment, call it underwhelming or landing with a thud, you could just say it's gradual. It leaves space for risk assets to rally in the short term.
Yeah, the market so far, Anna, mostly shrugging it off. And that was definitely true in Asia overnight, where it was a much more positive session than we saw on Tuesday. Overall, the MSCI Asia Pacific Index was up about 1/3% or so. Japanese markets were closed for a holiday, but China was trading, as were Hong Kong. Both of those regional benchmarks were higher. And of course, the move in Hong Kong was led by technology. The Hang Seng Tech Index up about 1.4%, snapping a 3-day losing streak. Though the small rebound we saw today only goes so far to help ease the 8% declines we had seen over the prior, if I can get my words out, 3 sessions. Now, there was also a lot of action in the bond market as well, specifically in New Zealand, where we saw another quarter-point rate hike to 1%. Plus, the RBNZ said that they see rates at 2.5% by early next year. So that had a dramatic reaction in the short end of the curve in New Zealand. That 2-year yield up 13 basis points to 236, the highest since December of 2016. And that also rippled through the curve in Australia. You saw the biggest move in the belly of the curve. That 5-year yield up about 8 basis points, 199 where we now sit, and that is the highest in about 3 years, Matt.
All right, Kayleigh, thanks very much for that. Now, we did see the U.S. stock market go into correction territory officially yesterday. Danny Berger is going to show you that chart in a little bit, but we're looking at a little bit of a bounce right now. S&P futures up about 0.9%. As Kayleigh said, markets responded kind of with a shrug to the gradual, I guess you could call them, if they follow with more sanctions that the U.S. and Europe put on Russia. The Bloomberg U.S. dollar index coming down 11.72. Remember, this is a safe haven. So when it comes off, it means risk on. And that's certainly what we see today. The same is true with bonds. 196.86 is the yield, which is relatively high, but investors are selling them off today. And that's why the yield continues to rise. And Bitcoin, also a risk indicator right now, up 2.6%. It is at 38,888. Whoa, that could be lucky. I will mention that, we saw it at 45,000 last week. So it's come down substantially. Still, my focus not on cryptos today. Anna, I'm very excited. Deep tease for an interview that we have later on this morning. Can you guess what it is?
I'm guessing it might have something to do with cars. That's not taking too big a gamble when I say that. Matt, you mentioned, and Kayleigh, you mentioned, and I was mentioning, in fact, in the headlines, that markets react with a shrug to the sanctions, maybe more than a shrug, maybe actually a little bit of relief in there. We certainly saw that in some of the Russian banks that had been rallying as it seemed to become clearer that maybe the smaller Russian banks were going to be targeted by sanctions rather than the larger ones. Russian assets, Russian equity markets that closed today for a public holiday, I should point out. But the rest of Europe then rallying with that same shrug, with that same sense of relief, perhaps, that the sanctions don't go deeper at this point. Room for the risk story to run in at least the short term. Let's roll over and show you what we've got on oil prices, though, because here we're seeing an interesting dynamic. I was talking about Brent crude at $99 yesterday. We're down at 96. Some of that is risk coming out of the Russia-Western tensions. At least maybe you can read that into some of the softer sanctions story. But there's also the Iranian lines coming through. We've heard from the Iranians just in the last half hour or so, 40 minutes, talking about how they're kind of hopeful that we get a deal on Iranian oil coming into the market. We'll see what that can do in terms of adding some downside pressure to oil prices. A couple of companies. This might be the one that Matt was talking about earlier. A couple of companies, I'm pointing for radio listeners, I'm pointing at a car company, Stellantis. A couple of companies reporting record profits this morning here in Europe and being rewarded as a result. In the financial services sector, Barclays coming through, that stock up by 1.8%. It's the M&A bankers, those doing advisory. That's where we're seeing some of the strength coming through. They lost out on some FX hedging. Venkat, the new CEO over at Barclays, CS Venkatakrishnan, to give him his full title, his full name. He's not too perturbed by that. And the company returning cash to shareholders as well. Stellantis, it's less about the volume and more about the luxury end of things, it seems, Kayleigh, when it comes to production of cars in this particular sector. And certainly that's been the story for Stellantis last year. And they plan to keep that focus on the sort of higher end autos as we go into this year.
Well, and of course, we'll be speaking with the company's CEO later on this hour. Matt Miller's excited, so am I, Anna. Now, as for what is ahead, not just this hour, but all day today, we will get more earnings here in the U.S. on the retail front. Lowe's will be reporting before the markets open. Very interesting as it follows its peer Home Depot, which disappointed yesterday and had its worst day since 2020 as a result. Then on the geopolitical front, NATO chief Jens Stoltenberg and Dutch Prime Minister Mark Rutte will speak at the NATO seminar in The Hague at 10:30 a.m. New York time. And finally, on the economic data front, we will get U.S. MBA mortgage applications at 7 a.m. New York time, Matt.
All right, now markets, as we've been saying, appear to be underwhelmed by President Biden's first round of sanctions on Russia, or maybe they're relieved. The sanctions targeted a pair of Russian banks as well as 3 members of Russia's elite. President Biden announced them yesterday.
We're implementing full blocking sanctions on 2 large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russian sovereign debt. That means we've cut off Russia's government from Western financing.
Bloomberg Washington correspondent Anne-Marie Horder joins us now from D.C., as well as our European correspondent Maria Tadeo out of Brussels. Anne-Marie, we'll start with you. These sanctions were not as swift and severe as the U.S. had promised.
No, but the president made clear yesterday this is tranche 1. But, Matt, you are right to point out the criticism that the administration faces that these were just maybe too incremental. And could they or should they have been harsher? That is a question that is certainly swirling around Washington. But similar to what the UK Prime Minister Boris Johnson says, the president says this is tranche 1. And Dalip Singh, the president's principal deputy national security advisor when it comes to finance and economics, he has said this is the beginning of an invasion and this is the beginning of our response. We are ready to press a button to the action on the 2 largest banks that they are now talking about. One senior administrative official said the U.S. is specifically considering actions against Sberbank and VTB banks if an invasion were to proceed. So they are continuing this deterrence strategy. There are some sanctions in this phase 1, we can call it, but then they have more ready to go if there's a further invasion of Ukraine.
All right, Anne-Marie, that's deterrence. Let's now talk about diplomacy. U.S. Secretary of State Antony Blinken says his planned meeting tomorrow with Sergei Lavrov of Russia has been canceled. Listen to what he said yesterday.
Now that we see the invasion is beginning and Russia has made clear its wholesale rejection of diplomacy, it does not make sense to go forward with that meeting at this time. I consulted with our allies and partners, all agreed.
Anne-Marie, was that the death knell for diplomatic effort?
Well, Tony Blinken, Secretary of State, also said in those same remarks that the U.S. remains open to diplomacy, but they want to see steps that Russia will take that the international community can all gather around and agree that these are steps to claw back those troops. And they're serious, in his words, about de-escalation. And then they remain that would be the only way forward when it comes to diplomacy. But we should note there was already parameters going into this meeting. Ned Price, the Secretary of State spokesperson, said this meeting will only happen if there's not an invasion of Ukraine. And clearly the U.S. government yesterday was saying that President Putin, recognizing those 2 separatist states, the so-called self-republics in Donetsk and Luhansk, they're calling that an invasion.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Horder in Washington. We're just seeing a red headline across the Bloomberg, which I should bring to your attention. It says that Ukraine is seeking to declare a nationwide state of emergency. Let's stick with the ongoing politics surrounding this, of course. Maria Tadeo is in Brussels with the latest on the European response and Germany halting Russia's controversial Nord Stream 2 pipeline. Maria, I mean, this is not something that is in operation right now, but it is incredibly symbolic around a pipeline that was really a priority for President Putin.
Yeah, it was. And Anna, just to pick up on that headline that you mentioned, of course, Ukraine saying perhaps we're entering into a state of emergency. But today also they said that reservists in the army would have to get back in line. And also they're approving legislation that would facilitate for ordinary people to have weapons. Of course, this does show that the situation on the ground, Anna, still continues to be incredibly tense. Now, on the Nord Stream 2 pipeline, yesterday we heard that finally from Olaf Scholz, the conditions to approve this pipeline, they're not right at the moment. We can't go ahead with this project. Now, we could be perhaps even cynical, critical of German policy and say that, of course, Nord Stream 1 is still working operational every day. The Germany has bankrolled the Russians for years. But I think we really need to stress here that this is a big departure from Angela Merkel. Remember, Angela Merkel, for many years, her doctrine was that politics, business, and trade are separate things. Yesterday, from Olaf Scholz, it was the opposite. He said it cannot be business as usual. This time, it's peace at stake. We cannot have normal business relationships with Russia at this point.
All right, so that is, of course, what Germany has decided to do. We've seen sanctions out of the EU, the UK, the US on an individual country or country group level. What about NATO? Jens Stoltenberg, the chief of NATO, says Russia is still planning a full-scale attack. What will be the response from the alliance in that event?
Well, Kaylee, for the time being, we're seeing that they are deploying more troops in the Baltics. The Baltics, by the way, the three countries, Lithuania, Estonia, and Latvia, will be visiting Ukraine as a sign of support today. They welcome those troops. But I think going forward, what we're going to see is NATO operations that become bigger in number, but also longer in time. This is not going to just go back to how it was in a few months' time. That is very clearly the message from Stoltenberg, who's saying, actually, we're entering into a new phase of European security. And this is a very grave situation that we're seeing at this point. This threat of full invasion going into Ukraine has not gone away, and we're particularly worried, by the way, of Belarus. Remember, Lukashenko, the leader of Belarus, the other day said we would welcome nuclear weapons. If Russia asks for a favor, then we'd say yes.
Wow. All right, Maria, thanks very much. Maria Tadeo there in Brussels, and thanks to Anne-Marie Horder in Washington, D.C. as well. Now, the technical backdrop for stocks is deteriorating so much that some bulls are even preparing to change their outlook. Strategists are now forced to price in escalating tensions between Russia and Ukraine, as well as a hawkish Fed. Let's get more with Bloomberg's Danny Berger. Danny?
Well, Matt, I do just want to, at the start, say that there are some people out there who point to things like earnings still accommodative environment as saying, okay, my bullish case is intact. But now that we have that out of the way, let's talk about the pessimism that's building in this market. We've seen, for example, the S&P 500 yesterday fall 10% from its peak. The technicians are worried. We've fallen well below the 200-day moving average, what one technician called a stock market teetering on the edge of support. We also have a yield curve that it's at its flattest in 2 years, suggesting that there's concern about the economic environment as we have all of these issues swirling around. And look, you could look at a day like today and say, okay, equities are rallying. Perhaps there's not that much fear. But people who are worried about the price action, I think, are really well reflected in what Rich Ross over at Evercore ISI said, who I should say also sees a 20% decline due to these deteriorating internals. He says while ephemeral relief rallies will occur as the conflict ebbs and flows, the seeds of the current decline were planted by policy in the pandemic long before troops amassed on the border, Anna.
Yeah, that's interesting. That chart certainly looked very scary,
yes.
Danny. The only colour available apparently is red. Let me ask you about commodities. Jumping on the Ukraine crisis, of course, and this isn't just energy. In fact, the energy story a little bit more different today. But yes, there's energy, there's wheat, there's nickel, there's cooking oils.
Exactly.
The Bloomberg Commodity Index at new highs.
Exactly. The spot price at new highs. Ukraine is seen as the breadbasket of Europe. It's the second biggest grain producer. You mentioned some there, wheat, sunflower oil, but also metals are important in the region as well. Exports of aluminum and nickel. All of that is adding to already concerns of high inflation. We saw 2-year TIPS break-evens reach their highest level since Bloomberg started collecting the data in 2004. So all of this contributing to an environment that supply chains are already of concern. Now the question is, will we start to see exports from Russia of commodities be diverted away from North America and Europe? Does this environment, which so many central banks are already grappling with, get even worse, Kaylee?
All right, Danny, thank you so much. And we're just getting a headline from the BOE Governor Andrew Bailey saying that the Ukraine situation adds to risk that energy will rise and inflation risks coming from the energy price. That and the commodity story all really feeds together. Now let's get back to the U.S. markets and take a look at some stocks moving in early hours. A big one to the downside is CoStar. This is a commercial real estate information company, gave a current quarter and full year outlook that came up well short of expectations. And as a result, that stock absolutely plunging to the downside, down a whopping 26% in early hours. Another stock moving to the downside, and this is in some way tied to the crop story, is Mosaic. This is a fertilizer company. It also missed on expectations on both the top and bottom line, really struggling with supply chain issues, and says actually sanctions in Belarus could make that supply situation worse. That stock is down about 6% before the bell. One more positive story, though, is Nubank. This is the Brazilian digital bank backed by Warren Buffett. It posted a surprise profit. Analysts were looking for a loss. Maybe throws a little bit of cold water onto the bearish thesis for this company. That stock is moving up the better part of 11% before the bell, Anna.
Kaylee, coming up on the programme, from geopolitics to central banks, we'll speak to Caroline Simmons, UK CIO at UBS Global Wealth Management. We'll join a few of the dots for you this morning. And earnings exclusives, we will speak to the CEOs of Rio Tinto and Stellantis, plus Goldman's struggles for top talent, how new pressures are leading to strained exits at the banking powerhouse. More ahead on our Big Take story. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December, when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lines, Anna Edwards with us out of London. Now, Daniel Curtis, our star graphics producer in London, put together this chart for me, and it shows a highly selective portfolio of value stocks in white and high volatility stocks, the big momentum stocks, in blue. And it goes over the last year. You can see that value stocks have really outperformed. And we're going to talk right now with Caroline Simmons, UK CIO at UBS Global Wealth Management out of London. And Caroline, you think this outperformance will continue as long as bond yields keep rising?
That's right, yeah. That's very much what the dynamic is that we've seen this year, as the bond yields have risen and the expectations for interest rate rises were brought forward, that has driven very much this value play, which is, significantly underperformed for very long periods of time, is now getting its outperformance time.
And you think that continues then, Caroline? And if so, to what extent?
So I think it continues as long as bond yields rise. obviously the rising of the bond yields is causing a derating of the longer duration growth assets. So until bond yields stop, then value is likely to outperform. Exactly when that happens, obviously harder to know on the timing, but in terms of levels, I mean, for the US 10-year, for example, we think it gets to about 2.3%. So, those are the sorts of levels that we're looking for. Obviously, we've had the largest part of the move for the bond yields and therefore probably for value, but there is still some further upside to go.
Okay, and it could be that the geopolitics gets in the way of some of that, Caroline. We've seen the geopolitics, of course, push people into bond markets and keep a lid on those yields in Treasury markets. You still see full conflict as a tail risk, and I mean, neither of us are perhaps strategists around the military tactics here. But if you do see it, why do you see it still just as a tail risk? I suppose is one question. And if we did see full conflict break out, what would that do to oil prices and to stocks, Caroline?
Yeah, so I mean, we view it still as a tail risk because ultimately the cost socially and economically of a full conflict is very damaging to all sides. So I'm not sure that any particular side's actually aiming for that. In terms of if we did get a full conflict, then our assumption is that the oil price would move up quite significantly. We've modeled it at $125 a barrel. That then would take about 0.5% off global GDP growth. And that could lead to global equities falling 10 to 15% as the initial response. We would then see, if central banks or other actions are taken. But that's the sort of tail risk scenario.
Well, on the subject of global equities, Caroline, we just talked about the value trade kind of on a sector level as it relates to rate sensitivity. Europe has been, to some extent, a beneficiary of that value rotation. Is there a threat if you see a more persistent energy crisis in Europe start to be a threat to growth due to some of the geopolitical situation, that Europe actually is going to be a laggard once again?
Yeah, it's sort of interesting. So obviously Europe benefits from higher oil prices, the UK particularly, which has quite high exposure to energy. So on the one hand, it would benefit if sort of geopolitics caused oil prices to continue to rise. But obviously, if that were to lead to significantly higher risk concerns about the scale of a potential conflict and the impact that could have on growth, then obviously being a cyclical market, the Eurozone, would also suffer.
And on the subject of the Eurozone, as it relates to ECB policy, do you think more aggressive action is more likely if the situation unfolding between Russia and Ukraine proves to be inflationary, or does that give them an excuse to maybe sit on hold for longer?
Yeah, so, I think the initial sort of drivers, if you like, for the ECB are going to be wanting to see what happens to the impact when they've finished ending QE and the TLTRO. And then, if oil prices are a little bit higher because of geopolitics, I think they'll probably look through it. If we are in some sort of much more severe conflict scenario, then perhaps that would have an impact on, rate rises because it would have an impact on the growth outlook. But I think just, with oil prices as they are now, in the sort of situation that we are now in, I don't think that particularly has much bearing actually on the ECB's sort of timing of rate rises. We'll find out more in March when they provide their inflation forecasts.
Yeah, we're all waiting for March. Thank you so much for providing us some of your insight this morning. That's Caroline Simmons of UBS Global Wealth Management. Now let's keep you up to date with news from around the world, and here's your first word. The fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to Bloomberg, the Bloomberg Billionaires Index, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll of the escalating virus outbreak that has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year, following 6.4% in 2021. Apple has dropped its mask requirement at most retail stores across the U.S. That's following reduced coronavirus cases and changes in local mandates. Apple's also ramping up for the return of in-store classes. The company is preparing to launch new versions of the iPhone, iPad, and Mac. And Barclays has posted its highest annual profit on record. The British bank's dealmakers had a busy end to the year that helped offset a slump in trading activity. In the fourth quarter, income from Barclays capital markets and merger advisory work rose 27%. And Anna, I know you've been following this Barclays story very closely. The shares getting a lift in the European trade on the back of those earnings.
Yeah, even if there were disappointments around some of the trading revenue and certainly FX exposure didn't go the way that the bank wanted in certain instances, or some of their trades, hedges around FX didn't go how they wanted them. The CEO putting those to one side and focusing instead on other matters. The banking sector in focus. Once again, Matt, it was the M&A bankers who were doing well here. It was a story that we've seen at other places about how deal makers and those who give advice are the ones on Wall Street and in the banking executive suites here in London that are bringing in the pounds or the dollars.
Yeah, absolutely. I mean, M&A was at a record. In fact, a lot of the earnings reports that we see out today beg the question, have we hit a high watermark? We got some incredible profit margins, incredible net profits, really high revenues from a lot of the companies that we're talking about, Stellantis, Rio Tinto, Barclays, etc. And the question is, can that continue?
Absolutely, and that is certainly a question we will put to the next executive that we speak to. Our earnings exclusives keep coming. We'll speak with the CEOs of Rio Tinto and Stellantis. Rio Tinto delivering record profits. Can they last? This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. President Biden's first round of sanctions on Russia for its actions in Ukraine hit the markets with a thud. The sanctions targeted a pair of Russian banks as well as 3 members of Russia's elite. Members of Congress from both parties say the White House should do more. S&P 500 charts are looking pretty bad. Even bulls are looking to adjust their bets. The index fell for the 3rd straight day on Tuesday. It's now down more than 10% from its record high at the start of the year. Meanwhile, commodities investors are waiting for the next twist in the Ukraine crisis. Everything from gold to wheat took a calmer turn today. And Goldman Sachs plays hardball. The firm isn't just paying the biggest bonuses to keep executives from leaving, it's also turning the screws on those who do. Goldman is now considering the so-called nuclear option of confiscating vested stock of some who leave the bank. That's usually reserved for cases of misconduct. We'll have more ahead in today's Big Take story. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Matt, we talked about where the markets are. Actually, a pretty decent picture, though, today in the very short term.
Yeah, a little bit of a relief rally after we closed in correction territory yesterday. The S&P closing down 10% from its highs, but now you can see we're bouncing a little, up 0.8% on futures if this holds. But you do see a lot of risk on indicators elsewhere. The Bloomberg Dollar Index down, so no one's seeking safety in the greenback. Treasuries also down, so the yield is rising right now, 197.03. Investors don't need the safety of U.S. debt right now. And Bitcoin is up as well. It is well off the highs that we saw last week, but still up 2.6% at 38,882. So it looks like it could be a little bit of a rally today.
All right, Matt, well, you're definitely seeing some reaction to that move in Bitcoin when it comes to the individual equities trading before the bell here in the U.S., in that a lot of those crypto-tied stocks are getting some relief this morning, one of them being Coinbase, which fell pretty hard yesterday. It's up the better part of 3% in early hours today, though. And you're also seeing a rebound in a lot of those big tech names after the declines of Tuesday. Tesla, for example, fell more than 4% in yesterday's session. Today, though, it rebounds by about 2.25%, and that's true with a lot of those large-cap tech companies. There's also some earnings stories out there, one of them being Nubank, which is the Brazilian digital bank. It's backed by Warren Buffett, reported a surprise profit. Analysts thought it would report a loss. That stock is up more than 10% as a result. And you also have Stellantis, the automaker, moving to the upside. It still sees double-digit margins for 2022, even in the face of those supply-side challenges like that persistent chip shortage. That stock is up the better part of 6% in early hours, Anna. And of course, we are just moments away from speaking with the company's CEO.
Yeah, absolutely. Watching that one move higher in the Europe session. Kaylee, let me talk about the Europe session more broadly then. And the Stock 600, we started out in positive territory and we've kind of lingered there actually for much of this morning, up by 0.8% on the Stock 600. Some of the markets, including the French market, doing very nicely, thank you, up by 1.3%, as a lack of very tough sanctions in at least the short term seems to leave the way clear for risk assets to get a small boost, to rally, at least in the very short term. Thinking about oil prices, we've seen a bit of a retreat in oil prices. We're at 96 or so dollars a barrel right now. 96.27 is where we currently trade. So we are seeing a little bit of a pullback in oil prices, but other energy assets are to the upside. We have seen gas prices and electricity prices moving higher. A couple of corporates to focus in on. We've got Barclays for you. That stock up 2%. We talked about this earlier. The advisory and M&A businesses doing well here. We've also got the Rio Tinto share price in there for you. Just a touch to the downside, down by 0.4%. The highest ever profits from this business. And just like some of the other companies we've heard from, putting out a return of cash to shareholders. But this is really huge, $7.7 billion US. They benefited in 2021 from higher commodity prices. How long can that continue? Let's get to an exclusive interview now with the CEO of Rio Tinto, Jacob Stoutholm, who joins us now live from Sydney. Jacob, thank you so much for joining us. We appreciate your time. Let me ask you about how much of this success can continue then. Record profits last year, but now many people have questions about where iron ore goes from here, iron ore prices. So can you continue to deliver these kinds of results?
Very good questions. Thank you, Anna. First of all, our guidance for this year is that we will have modest growth, supply growth in our production, and there is really good demand for our products. So we have started the year well, but I'm not in the game of predicting commodity prices. They are very volatile. So, but short term, there's a good demand from China, and longer term for a company like Rio Tinto, the metals and minerals that we are producing are really being helped by the energy transition. So the longer term fundamentals looks good for Rio Tinto as well. But I don't dare to predict commodity prices. It has last year indeed been a good year, and it's a record result. What is interesting with our result is it's not just iron ore you're asking about. We also have significant improvement in our aluminium business, in our copper business, and in our minerals business. So you can say the business right now financially are firing on all cylinders.
I think of, you know, a mining company as simply getting stuff out of the ground and selling it. But of course, you got to move it all around the earth as well. How much of your business is logistics, and how much can you improve on those kind of costs after the supply chain issues that we've seen over the last couple of years?
Yeah, thank you. No, look, we are one of the biggest shippers in the world, but it's a fairly simple supply chain, and we have been able to keep it going. I will say to you, though, we have mining, but we have almost as much processing. So if you take, for example, the aluminium chain, it's mainly processing, and there's, of course, quite a lot of shipment as well. It has actually worked surprisingly well. I'm very grateful to see how we have been able to cope with COVID, kept all mines going, and kept producing throughout the pandemic.
The reason I thought of that is one of our BN reporters pointed out that you've got a development on an iron ore mine in Guinea, but you haven't yet got a rail line in place to export it. Can you tell us about how that's going, where you stand on that kind of development?
Absolutely. I mean, Rio Tinto is a very long-term company, so we always have to work many years out in the future. But we are in a joint venture with our Chinese partners. We are working closely with the government and the other consortium to get in place a full project. It's going to be one of the biggest projects in Africa. It's mine development, but as you rightly say so, it's a very long railway and it's a significant port development. But it is a project that could be really beneficial both for the people of Guinea, but also to the world, because it represents some of the highest quality iron ore that is much in demand for the energy transition. Going towards more green steel, you need the higher grade iron ore.
On a different subject, Jacob, I wonder how daunted you are by the cultural transition that you're trying to bring about, or culture change you're trying to introduce at Rio Tinto. Of course, this goes back to the destruction of ancient Aboriginal Australian heritage, and then more recently a report that talked about harassment at the business, about racism and bullying. I mean, this seems to be quite extensive. Are you daunted by the scale of the challenge ahead?
It is indeed a daunting challenge, but if I look back, we have learned some really tough lessons after the destruction of Juukan Gorge, and I'm very, very proud to see the shift, not just in our leadership, but across the company in terms of how to re-establish relationship, understanding the importance of working closely together with the indigenous people where we operate, the traditional owners of the land. We have really fundamentally changed over the last 12 months in that regard. And indeed, we decided to look deeper into our work culture, and we asked the former commissioner in Australia, Liz Broderick, to do an extensive report that we announced 3 weeks ago. And there were some confronting messages about bullying, sexual harassment, and racism. But we have just decided to be super transparent about it. It's the only way we can address the things. And I must say now, 3 weeks after announcing it, I'm really pleased with the kind of dialogue we have in the company. I'm absolutely convinced that we can address that, not just because there are things that simply are not acceptable going on in our culture, in our company, but it's also about just creating a safer environment where people feel more happy about working, and ultimately will also create a more effective company. It's a big transformation. We can do a number of things immediately, but it's also a longer term development. You have to be patient when it comes to culture change.
Jacob, thank you very much for joining us. The Rio Tinto CEO, Jacob Stausholm, joining us there from Sydney. Coming up on the programme, we'll keep talking about the earnings stories. They're coming thick and fast today. Another earnings exclusive. The Stellantis CEO, Carlos Tavares, joins us shortly. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
We're going to be operating this as a true luxury company, only manufacturing vehicles to order, and that fruit is bearing and showing how successful we can be by manufacturing the appropriate demand, supply, and get retailing more cars than we wholesale. So the first step towards a journey which will take us to 10,000 cars by 2025 and a profitability of 500 to 600 million EBITDA.
And that was Lawrence Stroll, of course, the chairman of Aston Martin, speaking earlier on Bloomberg Television. Staying on autos, but moving to a slightly bigger manufacturer, Stellantis expects to deliver another year of double-digit returns in 2022, despite the supply chain problems that the entire industry is facing. Raw materials costs, tight labor markets here in North America, weighing on operations for everybody. To talk about all this and more is Carlos Tavares, the CEO of Stellantis. Carlos, thanks very much for joining us. I want to start with the same question that we just asked Jacob Stausholm of Rio Tinto. You know, after such a fantastic year, your operating margin, I think, was 11.8%. How can you do better? Was that a high watermark for your manufacturing?
Well, it's the DNA of our company, the DNA of our former families that led to this fantastic brand new company is competition. We love to compete, and we love to try to push beyond the limits or go to higher levels of performance. It is in DNA of both former FCA and former PSA, and the record results you have seen in 2021 are just demonstrating that. So, of course, in 21, we had a very huge workload with 3 layers of activities, creating a brand new company called Stellantis with a new business governance way, facing all the headwinds that we all know, and preparing for the long-term strategic plan that I will present to you on March the 1st. Despite the 3 layers, we could deliver the performance that you have seen, because we like to compete and we like to do better every single day.
You talk about the families that came together, Robert Peugeot and, of course, John Elkann. Was it a strategic decision to move up into a higher end, into a luxury segment that we've seen here with the Jeep Grand Wagoneer, for example, or the Ram trucks? The interiors have really been the talk of the town. It's moved you into really a higher price bracket.
Absolutely. We are creating more appeal in our products, being the Jeep brand, the Ram brand. We see that the market shares are growing. We see that we are taking some top spot positions in terms of sales and marketing, which means that our customers are willing to pay for the additional value and the additional appeal of our products. That's quite obvious. And of course, as long as we are meeting our customers' expectations, there is nothing that will prevent us from going that direction. And as you know, we love cars. We love the product. We love the freedom of mobility that they are offering to our customers, and we will keep on doing that. And of course, you can see it on the margins. You can see that the 11.8% record operating income margin is also somewhere related to that premiumness that you have just described.
You're clearly having some success then at passing some of the higher costs on to your customers, Carlos. What about managing the supply chain challenges? What has been the secret to trying to get that right? And what visibility do you have on the supply chain disruptions through 2022?
You are absolutely right. We are in a very specific context of the market right now, because as you know, there is a significant supply shortage on semiconductors, and that creates some imbalance between the offer and the demand, which is supportive of a pull market instead of a push market, which is positive for the pricing. At the same time, our products are becoming better and better. Their appeal is increasing by the day, and our customers are recognizing that, so it gives us also some pricing power, hence the fact that we have such good margins and such good free cash flows. Now, moving forward, I would say that the situation in 2022 is going to be somewhere more of the same. I think we will continue to have raw material cost inflation. We'll continue to have some semiconductor supply shortage, even though I think the trend is going to be a slow, very slow improvement, but still in the right direction. So we will continue to do things that the others cannot do. We are a very diverse company, and we have a huge amount of synergies coming out of the merger that we can implement, and that is going to give us some additional levers that some of our competitors cannot pull. And you'll see next week when we present the long-term strategic plan that you have some surprises about the new products and about the technology that we are going to bring. So all of this
Carlos,
gives a lot of confidence.
When we hear that strategic plan from you next week, can you give us any insight into what plans around China they might entail?
Yes, I can tell you that I will explain this to you on March the 1st in detail. I can tell you that, of course, it is very clear that the first step is to clean the red ink, which we are successfully doing right now, and you can see it in our financials for 2021. And I will tell you more about the way we are going to organize our business in China. Now, be aware that most of our business is in the Western world, in North America, Latin America, where we are the leaders, and Europe, Africa, and the Middle East. So for us, China is only an opportunity. It's an opportunity to do better. It's an opportunity to go even further. And we have learned the hard way some of the things that we should avoid to do in that market. And we are now trying to implement all of those next business models that I will present to you next week.
When we get the new strategy layout. You know, I was talking with Michael Dean from Bloomberg Intelligence this morning, and he pointed out another opportunity that you have is Maserati. That could be a Porsche, a Ferrari, obviously. What do you do to make that a reality with Maserati?
Well, we are doing several things. First, we are making sure that we bring our Maserati quality to another level. As you may see, we are now being extremely severe and very demanding and very rigorous in making sure that we enhance our quality standards, and we make sure that we do not launch any new product as long as we do not match rigorously our most demanding quality standards. That's what we are doing. We are going to unveil very soon our new Maserati Grecale, because we believe that we have reached the right level of quality to launch the product. We will do the same thing with the next GT, GC models in 2023. So first is bring the quality level to the best level of the worldwide market in luxury. That's point number one. Point number two, we see that we are growing the profitability and at the same time the volumes as we are growing our market share in several regions of the world, including China, by the way, and those are very profitable markets. So we are moving in the value creation by doing at the same time increase of volumes and increase in profitability. And as you have seen in 2021, we were able to bring this brand to the black with a 5% operating income margin, which is very low, but it's in the black, which is great news for the team. And we intend to bring this profitability from 5 to north of 15% in the near term. And we think that with the technology that we are bringing, namely on electrification and infotainment, we can increase the value that our customers will be willing to pay. So that's the plan for Maserati.
Thank you very much for your time. Carlos Tavares, the Stellantis CEO, much appreciated. Thanks for talking to us here at Bloomberg TV. Up next, back to banking. Goldman struggles for top talent. How new pressures are leading to strained exits at the banking powerhouse. More ahead in our Big Take. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, let's turn to Wall Street because as firms struggle to hold on to top talent, Goldman Sachs isn't just paying bigger bonuses. It's actually weighing unprecedented action to head off departures with measures like seizing vested pay. Shonali Basak, Bloomberg Wall Street correspondent, joins us now for more on our big take story. Shonali, they're allowed to do that?
Well, what's interesting about this story that is named executives here, it's Omar Ishmael, David Stark, who moved over to Walmart and to run a fintech started by Walmart, and also Greg Lemkow and Eric Lane. These are lifers at Goldman Sachs. These are people
who went to a client, right? I mean,
that's the heart of the story here. And the reporting done by Sridhar Natarajan has shown that even though they've moved to clients, they are also rivals. So that line is becoming more blurry, and also long-standing traditions at Goldman Sachs are coming into question, including the rule of 60, where the number of years that you've worked there plus your age would mean you get to keep your vested stock. That relationship is becoming more tenuous.
I mean, Kaylee brings up one of the main questions I had when I read this story. Is it legal? And I'm sure they'll probably push the boundaries a little bit, so they want to be aggressive. One of the other questions is in the lead, right? Usually, and Greg Lemkow and Eric Lane, they go to what would be a client, and then they turn over business to Goldman Sachs. That's how it's worked traditionally. This nuclear option could destroy that relationship.
Yeah, the details in the story are really interesting, too. For example, Michael Dell deciding that he was also kind of upset with how Goldman had also treated its former employees, or the call that David Solomon made to the CEO of Walmart when his employees were poached. So it does create a lot of question marks here about that relationship. But again, I think one really important thing here is not just these four main executives that have spent their whole life there, but anyone in this new generation that is looking for a new job that is not staying at a company as long as they usually are.
Shonali, thank you very much, Bloomberg's Shonali Basak, with that big take story. NI Big Take is the function to use on the Bloomberg if you want more details on that. More Bloomberg surveillance is ahead. We will hear from Jeffrey Sachs at Columbia University. Elsa Linos of RBC Capital Markets joins the team. So plenty to talk about as markets continue to rebound this morning. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Investors are really dealing with what is a trifecta of concerns and challenges.
Seriously, every single headline is creating an aggressive move in the futures.
Volatility reflects current market activity, market participation.
This is obviously a short-term flight to safety, but I don't think that alters actually the long-term growth prospects.
I think now you may have some clarity coming after the actions of the Russian government.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Is Bramo part-time? Tom? She's part-time?
Seriously?
She's full-time?
You're starting that?
She's full-time. She's part-time. From New York City this morning. Good morning. Good morning. Tom Keene, Lisa Abramowitz is back. I'm Jonathan Farrow. Futures with a bounce up 0.7%. TK correction at the close on the S&P 500, down more than 10% from the previous peak.
Yeah, I'll go with you. It matters. The NASDAQ 100 down 16-ish% as well. The drawdown right now off futures, John, is maybe not as inflammatory as what everybody's waking up to this morning. More importantly is the movement of 2 standard deviations, and we're not there. We're not at a correction of 2 standard deviations. But, John, I take your point. Negative 10% is negative 10%.
So after the close yesterday, Tom, let's move to the geopolitics. Secretary Blinken cancelling his meeting with Foreign Minister Lavrov. It was due to take place this week. That was widely expected, Tom. What's next from here?
The what next from here is what we heard yesterday from some really qualified guesses. Well, how will Mr. Putin respond to that? I've been going back and forth with Javier Blas this morning on that gas price, natural gas price based out of Netherlands. And okay, it's not what it was at the beginning of the year in the panic, John, which you covered so well, but it's still hugely elevated over the normal of 2020 and 2019.
That's the what's next in Europe. Lisa, let's talk about the what next here at home in the United States. That address from the president yesterday, there was a subtle hint there. This will cost us at home to defend freedom abroad. What are they going to do to offset this? Are we talking about a deal with Iran? Are we thinking about a tax holiday on gas? What are we doing here?
Honestly, I'm not getting a cohesive message because we also got a delay to some of the permits for certain oil and gas exploration in the United States. What is the cohesive message around domestic energy? And then what is the plan to move away from Russian gas at a time when the U.S. has supplied Europe with some, but can't really make up for what Russia supplied?
And if you're just tuning in as well and noticing that bond yields are higher around the world, it started in New Zealand, Lisa. We got a 25 basis point hike, and then the end point, for the RBNZ changed. The endpoint went from what, 250 through 3%? They're going to take things higher than they thought previously.
They feel they need to be more aggressive, and this has been the mode of travel that we've heard consistently through a lot of the developed market central banks. At what point does the Fed follow? And I think that one of the key questions is, does the altercation, does the issues that we're seeing between Russia and Ukraine actually accelerate potential rate hikes, force the Fed's hand, because it is inflationary if you see oil prices rise to the degree that some people expect.
Would you like me to say the RBNZ, Tom?
Oh, no,
Is that what you'd prefer?
No, they say Z in Maryland.
In Maryland. Maryland.
John,
let's not offend people first thing in the morning.
Z works. If I say Z,
is how we say
like
it in the UK.
If I say Z, it doesn't work.
Don't they say it like that in New Zealand too? Anyway, futures are higher by 0.75% on the S&P. On the Nasdaq, up by more than 1%. We've got a bounce here. Yesterday was a little bit rough, really volatile as well. It's a nice bounce. I said we've got a bounce here, Tom.
Yes, it's nice.
We're up 0.7% on the S&P. Yields are higher by 3 basis points, 196.86. Some Fed speak with President Daly, Tom, a little bit later.
Curve flattening, John, is important. That
We're in the 30s.
This morning.
I'm with you. 2s, 10s, Lisa. 37.
The idea here is that rate hikes are not going to lead to a longer cycle. Even if the New Zealand Central Bank is looking at a potential higher end rate, we're not seeing it in markets in the United States. Today, aside from Mary Daly speaking of the San Francisco Federal Reserve, we also are getting at 7:15 a.m. the Ukrainian President Vladimir Zelensky holding a news conference with the Lithuanian president as well as the Polish president. How much are they concerned about the lack of strict action by the U.S., by Europe? The U.S. sanctions were thought to be somewhat of a softball based on expectations. How much do you get pushback from the Ukrainian president coming out and saying, is that really enough? At 11 a.m., we get NATO Secretary General Jens Stoltenberg and Dutch Prime Minister Mark Rutte. They are talking about NATO's future, coming together at a time when oil prices very much front and center. Can Germany stick to its guns about trying to remain somewhat independent from Russia? Can they stick to their guns about Nord Stream 2 and not going further with that project, given how much energy prices, given how much natural gas prices have been surging? And at 1 p.m., Tom, this is for you, the Treasury is planning to sell $53 billion of 5-year notes with yields near the highest levels going back to 2019. What I find interesting, you're talking about yield curves and that yield curve flattening. It's not just the 210 spread. It's the 530s. It's even the 25s. And this really goes to the joint question that a lot of people have. If we bring forward rate hikes now, John, does that mean a shorter cycle, a quicker downturn, frankly, an end rate that is even lower than possibly what it could have been if the hikes were less severe?
Lisa, welcome back.
Thanks.
We missed you.
I'm not part-time. I was taking some vacation for President's Day.
We're just making sure. That's all. Welcome back.
It's good to be back.
Elsa Linios joins us now, Global Head of FX Strategy at RBC. Elsa, here's the situation. Crude just about in the 90s over the last few weeks, pushing 100 on Brent. The equity market down 10% on a closing basis from a previous high. Tensions in Europe, potentially recession in Germany. Elsa, how does the Federal Reserve handle this next month?
I mean, I think the most important thing to remember is that they're making policy for the US, and while they'll be very mindful of developments in the rest of the world, they've also got to be very careful of what's going on at home. You know, at the moment, you've had material upward revisions to inflation since the tail end of last year to where we are today. And while they'll be very mindful, like I said, of the risks and geopolitical risk premium getting baked in, they can't ignore a domestic inflation problem at home.
Elsa, talk to me with all your experience of EU and the finance, the investment of EU. What is the stability of the system that you see over there? Yes, as indicated by Euro, but far more your knowledge of the complete system for RBC Capital Markets. What's the level of stability right now in EU finance?
And what's really interesting at the moment is that after the ECB's pivot at the Feb 3rd meeting, for the first time you're seeing some spread widening. And for a long time that had been suppressed by the European Central Bank's asset purchases. Now you're beginning to see some measures of sovereign risk, credit risk coming back into markets. I wouldn't say that's questioning the fabric of the euro area itself, but it's just something interesting to watch. A bit of a pivot, if you like, for the ECB, making itself felt in financial markets.
How much of a pivot does Robert Holtzman really represent, a governing council member of the ECB, coming out saying he expects 2 rate hikes by the ECB by year-end? Is he just an outlier, or does he represent some sort of more significant pivot?
he's definitely one of the more hawkish voices on the ECB. But what I found really interesting in his comments was here you have one of the known hawks saying we may get to neutral by 2024. Contrast that to the RBNZ, and like John, I will say RBNZ, coming out overnight and talking about getting to neutral a lot sooner and well ahead of neutral, well above neutral at 3.4%. So I do think there are still some quite large differences across G10 nations.
So that's the thing we haven't settled away from the RBNZ and how to pronounce that, is how far the Federal Reserve will actually take this. And what was interesting about New Zealand overnight is to shift it that much that quickly, from 250 to 325. So if we had that from the Federal Reserve next month, I think there would be a big shock, wouldn't there, to move that dot that much higher that quickly?
Yeah, it would be a surprise for sure, but not one I think we should rule out altogether. When I look into the details of inflation, I know headline inflation is going up across the board, but I think people are overlooking some fundamental differences in core inflation. And it's really New Zealand and the US that are leading the pack within G10. So if you're thinking about places where, you may need rates to get at least to neutral, but possibly even above neutral, those would be your two most obvious candidates.
Really important conversation, Elsa. Thank you. And thank you very much twice for the Z. Arcelinos there of RBC. Almost forget what to say, Tom, when you've lived here in America for that long. You forget that it's Z and not Z.
Yeah, I really take issue, and this is not, about Z or that.
What is
not getting scope and scale of these economies. New Zealand has an economy the size of somewhere in the vicinity of Oklahoma or Utah. It's really, really important. Obviously, a key democracy in Southern Asia and down onto Australia. I get that. I can't remember. Is it to the right or the left of Australia? I never get that right. But, John, here's the reality. It's a smaller country.
It is.
They make movies there. I think they have sheep. They put out really, really,
keep offending people, Tom.
Really smart FX people like Nick Benenbrook, and that's great. But it's the size of Oklahoma or Utah.
Yes, Tom, but also, as you know, when you look across the history of central banking, macroprudential policy, where did it come from? Inflation targeting, where did it come from? On a central bank front, New Zealand really punches above its weight.
Way above its weight, and particularly on targeting. John, research just dropping. Mr. Kasman over at J.P. Morgan, a major adjustment. This is Kasman and Aziz walking away from $150 a barrel on oil. They say there'll be a more modest shock. They walk through the supply coming on, including Iran, John, and it's certainly a better tone from Bruce Kasman.
Well, that's the issue here, isn't it, Tom? Do we get an Iran deal? And does that change things sustainably over the long term? We heard from Vitol Group, spoke with Anna Edwards earlier this week, Tom. That's a big CEO of a big oil trading company, talking about a massive move in demand in the back end of the year, and perhaps pushing crude through to triple digits on a sustainable basis, at least through to next year. That's a different conversation than a short-term supply jump off the back of an Iran deal. Does that move the Dow, Tom, not just over the next few months, but over the next 12 and beyond?
I think the media loves the inflammatory statistics, and here's a major house, Bruce Kasman, of course, a good friend of the show, walking back $150 barrel oil.
Lisa, Brent, 96.
Okay, near term, perhaps you're not going to see the massive disruption. Markets are impatient. They want to see the path of travel more quickly, but it's unclear what could bring oil prices substantially down, even without this conflict. And you do wonder, even if oil prices stay where they are, how much of a shock is that to a market still reeling with supply chain disruptions and some of these other things? I mean, honestly, if you take a look at the inflationary impact and the effect, the ramifications on the Fed, it's not going to be easier monetary policy.
How was skiing?
I didn't go skiing.
You didn't go skiing?
We tried to get we tried to get somewhere and we got diverted and then we ended up coming home.
What happened?
Do you really want to hear it?
Yeah, no, we all do.
Well, we'll do it in the break.
Everybody wants to know now.
We missed our flight. They couldn't rebook us. We ended up in Atlanta in an airport hotel.
The Gulf Stream?
It was great.
You were connecting in Atlanta?
Yes. Do you want to hear more? Nobody wants to hear this.
Why were you late for the flight?
It was all human error. They forgot to load snacks.
This is like a travel
They forgot to load the snacks.
Yes, it gets even worse.
You should do like a Rick
This is great, Tom. This is great.
It's horrible.
Next up on the programme, Lisa's travels. And maybe we'll catch up with Anne-Marie down in D.C. as well. Stuart Kaiser of UBS coming up a little bit later. We'll catch up with him in the next hour. Futures up 0.75%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden's first round of sanctions on Russia for its actions in Ukraine hit the markets with a thud. The sanctions targeted a pair of Russian banks as well as 3 members of Russia's elite, but that hardly amounted to the economy-crippling measures the U.S. and its partners had hinted at. Members of Congress from both parties say the White House should do more. The fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to the Bloomberg Billionaires list, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll the escalating virus outbreak has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year. That's after growing 6.4% back in 2021. And Apple has dropped its mask requirement at most retail stores across the U.S. That's following reduced coronavirus cases and changes in local mandates. Apple's also ramping up for the return of in-store classes. The company is preparing to launch new versions of the iPhone, iPad, and Mac. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
This is the beginning of a Russian invasion of Ukraine, so I'm going to begin to impose sanctions in response far beyond the steps we and our allies and partners implemented in 2014.
The President of the United States, really strong words from him, from both sides of the Atlantic. Tom Keene, did the action match the words? That's where the criticism has been over the last 24 hours.
It's interesting, John. We got a headline out moments ago. The European Union matches U.S. ban on Russian bonds in sanction package. And, John, I just think it's absolutely fascinating. I thought Therese Raphael, who I've got an immense respect for, writing with Paul Davies, nailed. And, John, you were out front on this, which is Johnson with a lot more bluster, I'll say, parliamentary pizzazz than what we heard from the president. And Raphael and Davies just say, look, he did not deter, he did not punish in Parliament yesterday. The sanctions were sanction light.
Sanctioned 5 banks, Lisa, left out the big ones, 3 high net worth individuals. Some of those were already on the list for the United States for a long, long time. That's been the criticism. Really strong words. Where's the follow-up?
And this is the concern even about some of the German proclamations about Nord Stream 2 not going forward. Some people saying, yeah, right, we'll see it when we believe it. Them saying they could be independent of Russian oil. People saying, really? Can you, though? Russian gas. At this point, how do we get to a place where the actions justify the threats and actually are deterring to Vladimir Putin?
Let's whip through this price action just briefly. Up 26. We do have a bounce here. Up 0.6% on the S&P. On the NASDAQ, up 0.9%. Yields higher by 3 basis points to 196.86 on 10s. I am taking so much stick about the Z in the RBNZ, Tom.
You know, I mean, I know, I'm sure all of Maryland is emailing in right now.
They're upset too.
We'll talk about this in a moment. One of the great things we know of living in London for umpteen years, Anne-Marie Horder, and our Bloomberg Washington correspondent, did not shift from Z to Z. She joins us this morning. From A to Z yesterday, the energy in the room. How'd the president do, Anne-Marie?
Well, I think many were expecting the president to come out potentially with a little bit of harsher sanctions, given what we've heard from the administration over the course of the past few weeks. But one thing he did clarify was that what President Putin did over the weekend, the U.S. is considering a further invasion of Ukraine. We should note, though, the president made clear this is tranche 1, similar language that the U.K. Prime Minister Boris Johnson did, and they have more tools in the toolbox when it comes to sanctions.
Anne-Marie, in Washington, you've got a different perspective with, seriously, your efforts in Europe, including in Moscow. And I want to go delicately here to the statements, not always from leading politicians, of the paranoia of autocracy, the idea that Mr. Putin is not paranoid, but is working with a set of fears that are tangible. Do you buy that?
Well, I mean, let's call it what it is in terms of President Putin's leadership reign over Russia. Since the breakup of the Soviet Union 30 years ago, he has unilaterally 4 times changed the boundaries of those former states. In 2008, it was South Ossetia and Abkhazia. In 2014, he recognized Crimea, and then the next day, 24 hours later, he annexed Crimea. So what he did over the weekend in recognizing the Donetsk and Luhansk self-proclaimed republics, that was the 4th time he has done this. So I think what you can view from President Putin, instead of trying to get into his mind, is really just study his actions.
Well, let's study the actions of the allies. Are we seeing more cohesion, or are we seeing the opposite, that when it comes to the actual action, nobody can agree on something more severe, so everybody just sort of takes these cosmetic measures?
Yeah, the criticism against the allies that this was incremental, except for one, and I would say that was Olaf Scholz of Germany. And really, he helped the United States out yesterday, because every U.S. official I either spoke to on the record or off the record were saying, look, we told you Nord Stream 2 was going to get benched if there was an invasion, and Olaf
Olaf Scholz delivered in that. Now, we should note the German economy, this minister, Robert Habeck, is out saying this doesn't mean that it will never see the light of day. But at the moment, they are taking this political decision and not getting that certification that would be needed. I mean, there's already gas in this pipeline, right? It's just not turned on at the moment. We should note this clearly struck a chord with the Russians. And Jonathan was quick to point that out to me yesterday. Dmitry Medvedev, who was the former prime minister, is now a very senior Russian official. He was there over the weekend in that Security Council meeting. He said, prepare Europeans for a brave new world of higher energy costs.
So that was the message over in Germany. In the U.S., is there a similar message? I was struck by the fact that President Biden did not allow some sort of expedited oil permitting in the United States in response to what we have seen, which has caused some criticism. Why isn't there more support for the domestic energy regime? How much has that been a pushback, a criticism more widespread in Washington?
We haven't really heard a lot about that too much, in the sense that a lot of the focus is on what is the next tranche of these sanctions, right? But I will say Bob McNally, who worked under the Bush administration in the energy space, had said that this administration is looking under a rock. Those are the words he used, anywhere they can to get oil and fossil fuels to make sure that the geopolitical concerns will not hit consumers at the pump. And he says, why then are they allowing their federal and judicial branches go out and make it harder in terms of wells and pipelines and the likes in the fossil fuel industry?
I mean, Anne-Marie, this is important. There's an IMF series, folks, of Russian gas at the German border. But, John, you know that the series we follow on the terminal and worldwide is the TZT commodity series. Thank you, Javier Blas, for wisdom. The short-term chart, John, is up 30% since the 16th of February. And the long-term chart shows the angst that they're living on the continent of Europe as they look at TZT.
And that's how we pronounce it in London too, Tom, just for the record. This is after a monster move, Anne-Marie, last year as well. We've touched on this briefly. Let's build on it a little bit more. Where do you think the focus is going to be now? Is it to close a deal with Iran quickly? Or is it to do something at home, to have some kind of tax holiday on gas?
The tax holiday on gas, I think, at this moment is kind of just in limbo, right? When senators come back, they're going to need to make some sort of agreement between the two when it comes to talking tough and putting that pen to paper when it comes to Ukraine and Russia. So I would say that potentially an Iran nuclear deal. And what we're hearing out of Tehran from the foreign minister, Hossein Amir-Abdollahian, this morning, saying that he is optimistic, but critical in his notes this morning. He says that Iranians' red lines cannot be crossed. One of those red lines Tehran has always had was that if there's another Iranian nuclear agreement, that it would have to be law, meaning if there was a red wave or a future president that's a Republican comes in, they cannot tear it up. And that is just legally not allowed in the United States. So it does seem like there's an optimistic tone coming out of Tehran and Vienna where these negotiations are taking place. But if that is a red line that they will not cross, there will not be a nuclear deal.
Anne-Marie, thank you. AMH down in D.C. Look out for Anne-Marie a little bit later on Bloomberg TV and on Bloomberg Radio, catching up with the Ukrainian foreign minister. That is an exclusive interview later this afternoon, led by Anne-Marie Hordern. Looking forward to that at around 3:30 Eastern Time. Futures up 0.6% on the S&P, on the Nasdaq up 0.9%, bouncing back just a little bit from yesterday's losses. Yields approaching 2% all over again on 10s. 197 is your yield. From New York, this is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Down 10% at a close yesterday, at a close on the S&P 500. Correction territory, they call it. It's the bounce, perhaps out of correction territory, Tom. Up 0.6% on the S&P. On the NASDAQ, up about 1 full percentage point. A nice bounce back on your equity market, for now at least. Maybe the tally yesterday was at the front end of the bond market in twos. Why was that the tally? Switch up the board, yields were higher. So as we were all talking about the actions from Russia in Ukraine, the response from the UK, the European Union, the United States, two-year yields kept climbing. What did that tell you? That the Fed is still on course, on track to hike interest rates. And that conversation about 50 basis points, it's still there. Not in a major way, but it's still there. Up another 4 or 5 basis points today. Twos approaching 160 all over again, 159.76. It's not about the start point, though, as you know. It's not about the speed of the journey. It's about the end point. How far they're willing to push this. That's why the New Zealand Central Bank decision was so interesting. Looking to push it to 325 by the end of 2023. The previous forecast showed 250. So we adjust on the front end in New Zealand by 13 basis points. In Australia by 6 basis points. Will we adjust in the same way, Tom, next month? Because for a lot of people, that's where the comfort is. Yes, we might go in March. Yes, we might go many times through 2022, but ultimately they won't push it too far. That gives people, equity bulls, Tom, just a little bit of comfort to stay long.
John, I'm not a fan of the parlor game, and I'm even more so not a fan of the parlor game where we're hanging on headlines from Ukraine. I just think, you know, as you say with the correction.
It's price, Tom. That's why the consensus matters. That's why the parlor game matters, Tom. It's about what's priced, where is the consensus. The consensus at the moment is that they go 5 or 6 times in 2022, and that ultimately, Tom, they pause in and around 2%. Does the Fed have to go higher than that? When you think about where the surprise can come from, either upside or downside, hawkish or dovish, the hawkish surprise, Tom, comes from a Federal Reserve that has to take this interest rate a whole lot higher than this market and the Federal Reserves themselves are looking for.
Very good. I want you to stop and pause, folks, because what is important, buried in the Bloomberg terminal and of great use, is the track record of people. He is in the 97th percentile of 3-year performance, and in last year's tumult, defeated the Standard & Poor's 500 by what's called 731 basis points. That's 7% plus outperformance off SPX. He is so alone. Well, he has time to come on with us. Andrew Sliman joins, Senior Portfolio Manager at Morgan Stanley. Let me look back, Andrew. How did you do that in 2021?
Well, I think what really worked for us was most people own too many growth stocks, and starting to increase the exposure to value stocks and owning some energy and financials. That really distinguished. Look, I think the S&P has become a growth index. Top 10 stocks are largely growth stock, tech stocks. So tacking away from that, and being overweight some of the value areas in a year where they're working, and they certainly are so far, that right. You can drive. And look, at the end of the 70s, the top 10 stocks were energy stocks, and now the top 10 are tech stocks. So I think it's a great opportunity for active management.
You published this morning that what we're seeing here in our international relations and our fractured moment-to-moment focus is a buying opportunity. Why is that?
Well, look, because if you look at 10% corrections, on average, 12 months later, you're up a lot, even if they morph into much worse than 10% corrections. About half of the 10% corrections become 15% corrections, and a quarter of the 10% corrections become 20% corrections. But even if you look out a year, if you bought down 10%, it might get ugly earlier, which I think it will this time again. A year later, you've been well served to step up into those corrections.
Andrew, you just were talking about the importance of active management. We've been talking about the churn under the surface. Some big winners, I'm thinking of energy. Some big losers, I'm thinking of certain tech stocks. What do you buy if this is a buying opportunity?
Well, I think so look, on the surf, I'm really changing my tune a little bit since I've been on. Last year, I was on and I kept saying, look, the real high-flying growth stocks are too expensive, but I don't think the quality growth stocks are as expensive. Well, you know what? Those high-flying growth stocks have come down so much, and the quality growth stocks have held in there, that now the pricing has shifted, and I think the safer growth stocks, which are the mega cap tech stocks, are more vulnerable, because these, the high-flying growth stocks are just been so thoroughly trashed. So at the end of the day, the opportunity remains in the value stocks. Look, if the Fed, this is the very important point, if the Fed was going to over-tighten and kill the economy, cyclical stocks wouldn't be outperforming. Treasury yields would be dropping. Right? They're not. It tells me in growth, there would be a rotation into growth stocks. That's not happening. That tells me, as much as the discussion about how many times the Fed's going to raise rates, they're probably not going to raise rates as much as some of these predictions, because the market is telling me to stick with the economically sensitive stocks, and I think that's where you want to be.
Although a lot of people are looking at the yield curve, which is contracting at some of the narrowest levels that we've seen since the beginning of the pandemic, and saying, actually, recession risk is real. Growth scares are real. And frankly, we're not seeing that baked into some of these stocks, which means that perhaps they are more vulnerable. How do you push against that?
Well, that's true. I mean, yeah, you're absolutely right. The yield curve yesterday came down a bit. We'll have to see. It has come down and then it bounces back. Usually, as it gets closer to zero, it becomes a tougher, more stubborn. We'll have to see. High yield spreads, investment grade spreads haven't blown out that much. So I'm watching. I'm still sticking with this. Stick to the value trade. I still think you'd see a much bigger rally in Treasury yields than we saw yesterday, if in fact recession's around the corner. And then the other thing that I would push back is what no one seems to be talking about is, Lisa, do you know that the estimate for the S&P is higher today than it was at the beginning of the year? Estimates keep going up. Yes, I understand they're not going up at the same rate they did before, but the fact is companies continue to do better than what was estimated at the beginning of the year. That's bullish.
It's bullish, but we've got to do something here. Andrew, how much cash do you hold right now? I mean, with your track record, I think people really want to know the confidence is displayed by cash in portfolio.
Yeah, Tom, I've heard you ask that question before, and I think it's a little, if when managers say, well, I don't like the market and I've raised cash, I find that a little misleading.
Okay.
Because at the end of the day, what is it, if the market's down 10, 15% and you raise 5% cash or 10% cash, you're going to lose money, right? You're going to lose money. So So, to suggest that if I raise cash, I won't lose money as an equity long manager, I think that's very misleading, because at the end of the day, no one's giving me investing in my fund to go to 80% cash. I'm a long equity manager. I hope to God I do better on the downside than the markets, but I'm invested. So the only question is, how much will investors panic and liquidate? And we have seen redemptions the last few days. That, unfortunately, tragically, that's normal. Market drops, and as much as I'm saying, hey, it's a buying opportunity, people hit the panic button. And I suppose after today, we'll see inflows.
Andrew, just to sort of tie this all together, if someone was listening to this interview, they might come away saying, all right, go all in on Pinterest and Twitter. Was that your point here?
No, I don't think so. I think those stocks, and not specifically those stocks, but just those stocks in general, the carnage is so great, I'm not sure. I wouldn't recommend people to run out and sell them. I think they could bounce, but I don't think that's the big opportunity. I still think it's in the value names. But I just want to stress, I'm a core manager. I'm looking for the fast pitch. I still think it's in these cyclical stocks, because we're going to get some more ugly inflation prints. And look, think about it this way, Lisa. Yesterday, financials the market got crunched and financials outperformed. Think about since the great financial crisis. Every time the market went down a lot, financials got destroyed. And they're not. They're actually leading in the downturn. That's very unusual. So I'm heartened to see that even in the downturn, some of the cyclical areas seemingly are leading.
Andrew,
that's very unusual.
You're one of the best. We've got to go. It's got to catch up, buddy, as always. Andrew Sliman there of Morgan Stanley Investment Management. Lisa, you mentioned a couple of tech names. Facebook. My producer, Jamie, every single afternoon keeping me up to speed on where Meta is trading. We've cut that thing in half since early September. In half.
It's just shocking if you take a look at some of the valuations. So when Andrew's talking about the tech giants that have held in pretty well, it is a select group. It is not all of them. And then you have these non-profitable tech companies that have been absolutely pummeled. The issue that I have right now is buy the dip means something different when the dips are so varied across the landscape of different sectors. I mean, it just, to me, I was looking at, for example, the energy stock sector. It's up 20% year to date for the S&P. Just
Massive
giving you
move.
some sense of how much bifurcation there is.
The stat of the morning from Bank of America, Tom. The S&P's direct Russia sales exposure, 0.1%. 0.1%.
Yeah, this is really important, John, what you bring up here is the different percentages from Russia to us, from us to Russia. In every discussion we're having, I think, are really not understood by a lot of people. There's this huge belief we're tightly linked.
As JP Morgan points out, it's the indirect risk here. Slower growth, slower consumer spending due to higher energy prices. It's those kind of risks you need to try and gauge. Futures bounce up 0.6% on the S&P. Yields are higher by 3 basis points. Let's call it 197. From New York City this morning, good morning. Bramo's back. That's a good thing. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia's President Vladimir Putin says he's ready to pursue diplomatic solutions in the Ukraine crisis, but only if Russia's interests and security are guaranteed. Putin spoke after the US and its allies agreed on a first set of economic sanctions against Moscow for its actions in Ukraine. The Biden administration has delayed issuing permits for new oil and gas drilling on federal land. That could complicate efforts to keep gasoline prices under control. They're now poised to go over an average $4 a gallon. That's amid a conflict in Ukraine. A federal judge blocked the administration's method for assessing how its permit approvals affect climate change. The U.S. maternal mortality rate is already high compared to other wealthy countries. Now it has increased. According to the CDC, the latest figures show almost 24 deaths for every 100,000 live births. That's more than double the rate in the UK, Canada and France, and black women fared much worse than white women. And in the UK, police investigating the so-called Partygate scandal have told Prime Minister Boris Johnson and others they are being questioned under caution. That means any answers may be used as evidence. This is according to a document obtained by ITV News. The probe focuses on a dozen events that allegedly broke lockdown rules. And Alibaba faces a wild ride over the next few days. Options pricing is pointing to huge swings in the stocks. Investors are bracing for a drop in earnings and further regulatory scrutiny. The Chinese e-commerce giant is expected to report a 60% drop in its quarterly profit on Thursday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
From New York City.
Here in London, in Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
Now that we see the invasion is beginning, and Russia has made clear its wholesale rejection of diplomacy, it does not make sense to go forward with that meeting at this time. I consulted with our allies and partners, all agreed.
Secretary Blinken there cancelling his meeting with Foreign Minister Sergei Lavrov from New York City this morning. Good morning. Futures bounced back on the S&P, up 0.5%. On the Nasdaq, up 0.8%. Yields are higher by 3 basis points on 10s to about 197. This curve is flatter. The distance between 2s and 10s, 36 basis points, Lisa. It gets narrower and narrower.
And yet people think that the Fed will take a signal from this and perhaps not move as aggressively. Will the high oil prices, will the inflation that we're seeing in salaries perhaps change this equation and force the Fed's hand?
Will the situation in Russia, Ukraine, will it change anything, Tom, for this Federal Reserve? The overwhelming conclusion, the consensus, no.
They're going to wait for data.
No.
March 4th is the jobs report. We move on to CPI March 10th-ish, 11-ish, and then we go on to 16, and they'll make a decision on the 16th.
Got unity at NATO, Tom. We've got unity with allies. That's the good news. The bad news for some people, and where the criticism has come from, that those sanctions that they delivered, Tom, aren't strong enough. They're lightweight.
Well, they're lightweight, and again, the key thing here is now the response from Mr. Putin. She gave us a wonderful brief a number of days ago. We're thrilled to bring back Tina Fordham, head of global political strategy at Avonhurst. Just thrilled she could be with us this morning. Tina, I read the Putin speech. You did with all your professional ability, and I mentioned, I believe it was yesterday, about Lenin and the Bolsheviks. You go even further back to the 18th century and Catherine the Great piecing together what Peter the Great wrought. How does Putin go back to Catherine the Great?
I think we should interpret those remarks as his aspirations, but, you know, without giving away my trade secrets, if I've been any good at anticipating developments with respect to Russia, it's because I'm taking Putin at face value. He is telling us what he wants. I think he's also moved, though, from, I mean, I never thought he was a chess grandmaster, but from somebody tactical to somebody who's concerned about legacy. So that's what this is about.
What do the Soviet people want? Would you suggest the Soviet people, excuse me, the Russian people, I misspeak there seriously, folks, do you believe that the Russian people parsed between Lenin and Stalin as he did in the speech, or that the Russian people care about empire?
So first of all, we don't really have very good sources of public opinion data about what Russian people think. They are concerned about what they hear on, you know, Russia Today and other domestic channels, which is that Russian speakers in those so-called breakaway republics are being abused. And that's where the risk of a false flag incident comes in. This notion that Putin is trying to project, saying that Ukraine is not a real country because of the borders drawn by Lenin, etc., has been masterfully deconstructed, by the way. If you haven't seen the speech yesterday at the United Nations from the Kenyan ambassador to the UN, he talks about how if we're going to revise the borders and reconsider the sovereignty of every country that came out of empire, where do we start? And that Kenya and other African nations, which of course came out of colonial borders, also largely arbitrarily drawn, don't want to go there. That's the risk of what Putin is talking about by denying the sovereignty, the right to exist of Ukraine. And that's why this isn't about just these breakaway republics, Donetsk and Luhansk.
Oh, if the global order doesn't accept sovereignty and borders, then we have no order, Tina. I think most people would agree on that. What's interesting for me right now is just how effective these sanctions might be. Tina, they seem to be sanctioning again the high net worth individuals, the oligarchs in and around President Putin. I wonder how effective that's going to be. I watched that National Security Council meeting that was broadcast on Russian TV. They didn't seem like the kind of individuals that were about to turn around and tell President Putin he should change course. Do you think that this will be effective to go after the people with money, the people close to President Putin?
Of course it's not enough. But let's also remember, in fairness to the sanctions drafters who have a very tough job, that they're also attempting to sequence the sanctions, right? So to start with one wave, the EU sanctions have gone further, by the way, Jonathan. The EU has sanctioned all of the parliamentarians, hundreds of them in the Duma, who supported this move. But if there is a full-blown invasion, as U.S. intelligence seems to be warning, I also think Putin will go further. I don't buy what I'm seeing in some investment research that we're going to see a de-escalation. I see the opposite. We'll see another round of sanctions. So you don't want to, you want to keep some powder dry in the event of a worse event. But what I think markets are not giving enough attention to, and I listened with great interest to the previous guest and the bullishness, is the risk of a catastrophic incident. We are in what Clausewitz called the fog of war, and Russia has nuclear weapons.
Well, Tina, then what are you advising clients to do? I mean, how do you factor in that risk, that tail risk, that perhaps in your view is becoming more real?
Well, I think we moved from a tail risk a long time ago. And one of the things that I've been advising my clients for many years now is not to think in terms of a base case and a tail risk, but rather plausible scenarios. So we need to stress test portfolios against that. I don't disagree with the immediate conclusion of market participants that if anything, a geopolitical risk incident may, keep rates lower for longer, but not yet. I think the more worrying point really is about supply disruptions and, the international system. How does it impact investor portfolios? Russia has given us a very clear signal that it is not coming back into the fold, that it doesn't really care about sanctions, and that it is not a reliable partner. And in my 25 years of watching Russia, this is a real change in trend. We're not going back.
Tina, wonderful to catch up with you. Some really strong words there. Tina Fordham of Avonhurst, the head of global political research and strategy. Tom, that line there, we're in the fog of war, accidents can happen.
Yeah. It really harkens back to the fact and the fiction of not only our youth, but what we remember from the 30s as well. It's a phrase that has a huge, huge resonance. John, I was a victim of my childhood there, and I misspoke. I think it is so serious. I want to apologize for conflating Soviet with the word Russian. That shows my vintage, and I'm really quite sorry for misspeaking.
And that's okay, Tom. We're allowed to correct things. If things are wrong, correct them.
As Tina mentioned, growing up in this, we are at a point of shock. There's a certain thing about 89, 90, 91, 92. I've actually spent some time with Gorbachev, not with Yeltsin. And, I would go back really to the Yeltsin pivot, John, to the modern Russia that brought us Mr. Putin.
Tom King, Lisa Brambis and Jonathan Ferro. Futures this morning with the bounce up 0.5% on the S&P, on the Nasdaq up 0.8%. Yields are higher too by 2 or 3 basis points to 196. Let's round it up to 197 on 10s. This curve though is flatter. Your 2s 10s curve now 36 handle, 36 flatter, flatter, flatter. The Federal Reserve still hasn't hiked interest rates. That's still to come. Going to be very interesting to see how far they're willing to push this. Will they be willing to start a rate hiking cycle if this curve starts to go even flatter, maybe even invert?
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Investors are really dealing with what is a trifecta of concerns and challenges.
Seriously, every single headline is creating an aggressive move in the futures.
Volatility reflects current market activity, market participation.
This is obviously a short-term flight to safety, but I don't think that alters actually the long-term growth prospects.
I think now you may have some clarity coming after the actions of the Russian government.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Stocks up, yields up. We've got a bounce here from New York City this morning. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up by 0.4. The bounce fades a bit, TK. The Nasdaq up by 0.7. Correction territory at the close yesterday.
We've got the huge advantage of the terminal, equities, bonds, currencies, particularly currencies. Look at renminbi strengthening out. That's a separate story on strong yuan. But, John, the number that I look at on the screen, and you can take it to 3 digits, 36.172. We have legitimate curve flattening this morning.
The curve is flatter, Tom, south of 40 basis points as we go to that meeting next month. Tom, does that shape the views of anyone on the FOMC?
I think they're going to wait. We don't know what that meeting's going to be like right now. Massive uncertainty. I don't mean that in a negative way, but massive uncertainty. And they've got the jobs report and the inflation report. And frankly, John, the ISMs early in the month, I can't believe I'm saying that. They have merit too.
I got you on board, Tom. Took me about 10 years, but I got you on board to actually look at the ISM. That's good news. Thank you. Lisa, March 10th for the next CPI print.
The CPI print, how important is it going to be after all of the corporate earnings? And I say that because people keep talking about the dynamism in corporate America. They keep talking about people who are still going out and spending, even if they complain about the high prices. At what point does the Fed take a look at that granular corporate data and say, well, people might be feeling kind of rotten, but they're still going out and buying. And because of that, it's hard to see how this inflationary bent can really fade that quickly in the near term.
So Kathy Jones at Charles Schwab brought this up, Lisa. I think you'll appreciate it. We've looked at the crude price, commodities rallying over the last 12 months as reflecting really strong demand. At what point do we pivot and look at them through a different lens and start to say that could eat away at demand? That could erode demand.
Well, this has been the big question. At what point do higher prices actually lower prices because it crimps consumer demand? We have not seen it yet. And that, I think, is the big takeaway from retail sales, the big takeaway from a lot of the retailer results that have shown record gains in terms of how much people are spending on clothes.
The fog of war, Tom, some really strong words from Tina Fordham in the last hour of
Huge
Avonhurst.
words.
Accidents can happen, she kept saying. She was very, very very, very focused on what would happen next.
And David Weston watching this morning. Thank you, David. This is way too early for Weston. I mean, he slides
Weston's
in.
awake?
He slides in like at 11:40 a.m. But, he goes back. He says, look, this is what Tina's talking about, which is Clausewitz, the Prussian theorist from the early 19th century. And he talks about a fog of greater or lesser uncertainty and the need to be especially acute now. That's the skill set that's most difficult.
The Prime Minister in the UK, Boris Johnson, saying the UK is to provide further military aid to Ukraine. PMQ is taking place right now. We'll bring you the headlines from that as they pour in. And good morning to David Weston. Looking forward to Balance of Power a little bit later. He's up very early, Tom. Futures up 20 on the S&P, up 0.4%. We have a bounce here on the Nasdaq too, up 0.8%. Yields higher by 2 or 3 basis points to 196.51. TK picking up on what's happening between the distance between 2s and 10s. It's narrower. Lisa, that curve is flatter.
How much does this lead to a shift in what we see from the Federal Reserve? How much, you ask the question, are Fed officials paying attention to this, or do they shrug it off, as Bill Dudley said, which is a distortion of markets that have been heavily influenced by central banks? Today, in about 15 minutes, we hear from the Ukrainian President Vladimir Zelensky. How much does he come out and slam the tepid response that we have seen so far, at least tepid based on some of the responses that we have heard from allies? Also, we're hearing from the Lithuanian and Polish presidents. How much do we continue to see that unity versus some kind of crumbling of that unity as actions have to take more of the forefront rather than just harsh words? At 11 a.m., we hear from NATO Secretary General Jens Stoltenberg and Dutch Prime Minister Mark Rutte. They're going to be talking about stronger together, NATO's future strategic concept. Again, the unity, how much is there? How much meat is there behind even the German assertion that they are going to not move forward on Nord Stream 2? Does it matter? Is there any hard talk backing up some of the softer measures that have been taken so far? And at 1 p.m., the Treasury Department is selling $53 billion of 5-year notes with that 5-year yield near the highest levels going back to 2019. And we end where we began, that flattening yield curve. Is this a signal? Is this noise? And John, you're seeing it across the entire spectrum of yield curves. Even the 2-5s spread, basically the gap between 5-year and 2-year Treasury yields, has narrowed to the least going back to the end of 2020. How much does this indicate that the Fed is going to kind of make an error and hike into weakness, especially with higher oil prices?
Lisa, thank you. One to watch. Stuart Kaiser with us now, the head of equity derivatives research at UBS. And Stu, we started with that 10% correction. Let's go there. Not all 10% corrections are created equally. The difference between one you want to buy and one you want to run away from. Stuart, run us through it from your perspective.
Hey, good morning, Jonathan. I think in this case, we're being very, very patient, very, very cautious about the markets. We expected the first half of the year to be highly volatile with a lot of risks. If you look at the calendar for the next 3 to 4 weeks, it's really hard to find a soft spot in there where you'd be comfortable re-engaging in the market. So from our perspective, it's not time really to buy this dip, just because I think you'll get more bites at the apple at levels similar to this over the next kind of month or two.
Big focus on tech, on the cyclical part of the market. We caught up with Mr. Slibman of Morgan Stanley in the last hour, Stu. He was talking up the cyclicals, saying there's nothing to worry about here. Why would the banks be up if we're all worried about a slowdown in growth and a Fed taking it too far? What say you, Stu?
I think this is the big debate is sort of what is going to drive the market both higher and lower. I think in the last couple of weeks, we've seen both sides of that coin. When it was inflation risk and rates that were driving the markets, you had a different mix of sector leadership. But this, Russia-Ukraine is sort of a more traditional risk off, where I think higher beta stuff in general is getting sold. So I think if you get back into the inflation sort of Fed discussion, then you can be long banks and you can be long some selective cyclical parts of the market. If you're worried about this existential stuff coming out of Europe, I don't think you really want to own anything with beta. So really, I think that's what's whipped the market a little bit around, is you have two distinct risk drivers, and the market has priced them in a very different way. So again, for us, we're remaining fairly cautious, zero edge on what's going to happen in the Ukraine, and just sort of, I think it's a read and react market, and that's another reason why I think people have been very slow to re-engage with risk.
Part of this, Stuart, and good morning, on the technical aspect, and also folding over to what we measure in what's called the cross moments of the derivative space, is the idea of catharsis. How do you look for catharsis if, as you publish, you're looking at this as bending markets? Where's the catharsis?
Look, Tom, I don't think we've seen it yet, to be completely honest with you.
I don't see it.
I don't feel like we've had that day where it just felt like everybody was selling everything, and throwing the kitchen sink at it.
Do we need that to reverse and go higher?
Personally, yes, I do think we need that. And you're also in the midst of a Fed regime shift. And typically when you shift regimes, things, behave in a wonky fashion. So in our view, you're still in a bend, haven't broken mode. And this bumpy ride is going to continue, based on what we saw in January and based on the calendar we have ahead of us. So no, we don't think you've had that cathartic moment yet.
If you don't buy this dip, Stuart, what are you holding?
Holding on to the arms of the chair for the most part. But look, I think what we've seen investors doing is holding cash. A lot of risk has been taken down in the market. I think hedging is pretty full. So people have reduced risk either through owning less, which is the easiest way to hedge, right? Or kind of owning put options on various assets, whether that's high yield credit, whether that's U.S. equities. So again, I think, excuse me, I think, prior to this Ukraine issue, what people were holding was energy and banks, on the view that energy prices were going higher and rates were moving higher. I think the Ukraine situation just throws another wrench in the spanner because, as I mentioned, it changes market leadership. So I think from my perspective, you're being fairly cautious. You're running low risk. You're hoping that this Ukraine thing passes and you can get back to the trade that I think really started the year, which was yields higher, banks higher, energy higher.
Do you think, ironically, Stuart, that the ESG effort has actually helped the energy players on the S&P?
I mean, it seems to have, in the sense that the supply response on the energy side has been slower, I think, than you would have expected it to be a couple years ago. And, if we're talking about Europe in particular, I think the number one risk a lot of investors see in Europe is the energy situation, where I don't want to say they're facing energy shortages, but the price elasticity demand in Europe is going to be much higher right now because you've cut off a bit of supply from Russia, and they've also walked away from things like nuclear that would have been able to kind of paper over those cracks. So I think it has helped. I think it's made oil prices much more sensitive to these types of events, which has clearly helped the performance of energy stocks.
Stuart Kaiser, as always, of UBS. Stu, great to have you in the studio as well. Thanks for being with us here in New York City. Lisa, you've seen the move on the energy names on the S&P 500 up by more than 20%. You've also witnessed the reluctance of the C-suite of the places like Pioneer and elsewhere saying, no, thank you. We do not want to drill with crude at 100, 150 or even 200. And
this, honestly, is one of the big swing issues, which is the shale producers. How much discipline is there? How disciplined can they remain if you do see $150 a barrel of oil or even beyond, right? Or do they actually start to drill, baby, drill again?
So what does the administration do, Tom? That's the next move that I'm interested in. To hear President Biden speak yesterday and talk about the costs associated with defending freedom abroad, how will that play at home? What are the policy levers he can pull? Can he secure a deal with Iran? Can they have that gas tax holiday that was reported in the Washington Post in the last week as well? Is that where the effort goes from here?
I don't think Iran's on the radar of the American people, and I would take it again across the Atlantic, John, 8 time zones to Moscow. Maybe it's 9 time zones. I can't remember. Anne-Marie Horton knows that statistic. And the answer is they're going to wait to see the reaction of Mr. Putin. And, I don't need to get into the inflammatory Twitter stuff we see about what's happened in the last 5 or 6 hours. But, John, I would just note, dollar ruble is a good thermostat, and we've had, since the length of the show began here, that's a typo on my part, folks. That's RUB, not RUBL. On radio, we've moved weaker ruble 78.65 to 79.76. John, I'm sorry, over 80 through 81 is stunning if we get there.
Much better just to show the live currency pairs it trades on. Dollar ruble pushing 80 at 79. 79. Tom Keene, Lisa Bramis and Jonathan Ferro. Futures up 0.5% on the S&P, on the Nasdaq up 0.8%. Yield higher by 3 basis points. 196.68 and crude backing away. 91.37. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine is moving towards declaring a nationwide state of emergency. That would allow Ukrainian officials to impose restrictions on movement and media following Russia's recognition of 2 self-proclaimed republics in Ukraine. Meanwhile, President Biden's first round of sanctions on Russia was seen as underwhelming. Members of Congress from both parties want him to do more. And the fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to the Bloomberg Billionaires list, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll the escalating virus outbreak has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year, after growing 6.4% in 2021. And Lowe's is signaling that Americans' increased spending on home improvement projects still has room to grow. The chain posted better than expected quarterly sales and raised its outlook for the full year. Lowe's also saw operating margin improvement in the fourth quarter. And Barclays has posted its highest annual profit on record. The British bank steelmakers had a busy end to the year that helped offset a slump in trading activity. In the fourth quarter, income from Barclays Capital Markets and merger advisory work rose 27%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
为开春的时候，为各国运动员和随队官员提供热情周到的服务。
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. You know, there's a huge mismatch in supply and demand. Prices are high, you know, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open. Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
Every indication is that Russia continues to plan for a full-scale attack on Ukraine. We see the ongoing military buildup. They promised to step back, but they had continued to step up.
Jens Stoltenberg there, the NATO Secretary General, with futures this morning bouncing back from yesterday's losses in the equity market. We're higher by 0.6% on the S&P. On the Nasdaq 100, up 1 full percentage point at the close yesterday from the previous high. January 3rd, the S&P 500 down by more than 10%. Yields are higher, Tom, up 3 basis points on 10s to 196.86. You've been on top of this throughout the last few weeks, to be fair, TK. The relentless flattening of the yield curve. That distance between 2s and 10s gets shorter. That curve is in the 30s.
Not the time to do it here, John, but there is a massive distinction for the pros, folks, between a flat yield curve and an inverted yield curve. We'll do the math on that when we get a window here on fixed income dynamics. Joining us now, and this has been hugely popular. Thank you for the comments in Washington, Anne-Marie Horton, in Brussels, Maria Tadeo. Maria, we all await a response from Mr. Putin. How does he form that response? Is it an ad hoc aloneness of Vladimir Putin, or does he have a team deciding how to respond?
Well, Tom, we've seen it very clearly over the past 48 hours. He doesn't listen to anyone. This is a decision that is made by Vladimir Putin, and everything around him is theater, is optics when he calls his generals to get their opinion. In reality, we know that Vladimir Putin has already made that decision. By the way, today we haven't seen anything or heard from him because it's a public holiday in Russia. We could see it tomorrow, but there's 2 focus points where really the attention is based, particularly from NATO. One is, what is he going to do in Belarus? Remember, over the past 48 hours, he has essentially taken over 2 regions in eastern Ukraine and has deployed troops permanently in Belarus, which is the fastest way to the Ukrainian capital. So those are the 2 points where the attention is focused. What happens in Belarus and what happens particularly in the Donbass region?
Well, in the Donbass region, and summarize here, Maria, from Brussels, all the reporting you have of the distinction of where the separatists and Russians are now, and if they move west into the rest of Donbass, how will that be treated by Kiev and the West?
And that is the point, Tom. If they stay where they are, the reality is, and this is very crude to say it and put it this way, but we know that the Ukrainian government has completely lost control for 8 years of the 2 breakaway republics that Russia is now saying they recognize. Having said that, if they move away from that, then you talk about East Ukraine. And I was told by a Ukrainian official at that point that means war. So the distinction in those 2 lines is key, and that is really the battleground.
In all of this discussion of war, the fog of war, as Tina Fordham was saying, Anne-Marie, we are looking at a repositioning or deployment of 6,000 U.S. troops to Germany, Poland, and Romania near the border here. That is the scope in contrast with the 190,000 troops that Russia reportedly has built up on the border. Is there any discussion about further troop deployment? What is the pushback like on that?
The president mentioned this yesterday, further troop deployment into the Baltics, the likes of Estonia, Lithuania, Latvia. You also see the Defense Secretary Lloyd Austin talk about some movement of troops instead of Germany and Greece. Let's put some artillery and potentially troops as well in the likes of Poland. Poland is really critical right now for the administration because we did know that they were so concerned about a further invasion of and Russian aggression onto Ukraine. Even though they have moved the embassy to Lviv, they then took all their staff and moved it into Poland overnight. So what you are seeing the U.S. doing alongside their allies is just bolstering that eastern flank. And we should note, this is exactly what President Putin does not want.
Well, President Putin, however, has seemed to be clear. He's okay with the fog of war. He is okay being the aggressor. In fact, what he desires might not make economic sense for his nation, but it makes sense to get the predominance of the Soviet Union back to hearken to an older time. I am wondering whether the U.S. has the appetite for war, whether the allies have the appetite for war, or whether the measures that we're seeing now shows that they do not.
So two things. The president has made it clear, and he said so again yesterday, they will not be sending American troops into Ukraine. But, Lisa, I think you hit on a point that I think a lot of people studying Putin and looking at the situation just don't quite grasp. If this is going to be harsh economic pain, which we saw the first tranche, but potentially there are going to be other tranches of sanctions, this will hurt everyday Russians. It will hurt the elites around President Vladimir Putin. But he's had sanctions. 2014 annexation of Crimea, there were sanctions. When he poisoned Sergei, or called for the poisoning of Sergei and Yulia Skripal in Salisbury, there were sanctions. This is an individual who has said the greatest catastrophe was the breakup of the Soviet Union. And his speeches over the course of the years, his letter in July, the verbalization of that letter basically over the weekend, really clarifies that. And this is where his mind is when it comes to Ukraine, especially the eastern Ukraine.
Anne-Marie, you've made the point, and I think it's a really important one. So many people come on programs like this, they try and work out what the Russian president is thinking. Your point is watch what he's been saying, watch his actions, and also observe the importance of history as well. Today, Anne-Marie, as you know, it's the Defender of the Fatherland Day, the importance of today, the importance of February 21st. How important are these dates for him?
Vladimir Putin is someone who is really an assiduous student of history, and he loves dates. When I was in Moscow for the quote-unquote last election, they moved the date so that it matched up with what they call the reunification of Crimea. February 22nd, the day that we had a lot of this going on, was actually the day that Viktor Yanukovych, a Russian-backed leader, was fleeing Ukraine. This was a moment in which Russia lost that sphere of influence in Ukraine, and you had former premier coming out and saying this is a new Ukraine, a European Ukraine. Then you have today Defender of the Fatherland, and we've already heard from Putin in a statement talking about the crisis right now on this day, which is Veterans Day in Russia, saying that he wants a path for diplomacy, but not when it comes to Russian red lines. Those Russian red lines must be in the diplomatic talks. Now, already the United States says that's non-negotiable because that is a veto on Ukraine and Georgia entering NATO and also pulling back NATO troops to the 1997 line.
AMH, I've got to say, really looking forward to the interview a little bit later. Anne-Marie Hordern there, alongside Maria Tadeo. Anne-Marie catching up with the Ukrainian Foreign Minister. Tom, that interview taking place around 3:30 Eastern Time.
Usually fluid, and again, let's go 8 hours out on that, or 7 hours out, I should say, John, and you're deep into the evening. And it gets us to where are we tomorrow morning, not U.S. morning, but European morning. And you wonder, after a one-day pause, is it a launch of further developments here? There
was some language used by the British Prime Minister and the President of the United States. They both used this same phrase, tranche one, the first tranche, Tom, of sanctions. Just implied there's more runway here, there's more to come. Yeah, and they've got a new confidence in the coordination, particularly with Germany and the United States. Tom Keane, Lisa Bravis and Jonathan Ferro. Futures up 0.7% on the S&P. Yields are higher by 3 basis points to 197. From New York, this is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Direct Russia sales exposure on the S&P 500, 0.1%. That stat from Bank of America. We've got to think about what JP Morgan's thinking about, the indirect spillover here. A slower consumer off the back of higher energy prices. A recession perhaps in Europe if things escalate even further. Higher gas prices there. They're the issues we need to grapple with. For this market, we bounce up 0.7% on the S&P, on the Nasdaq up more than 1% at the close yesterday. You know well, we're down more than 10% at the close from the previous high on January 3rd. Is this bounce one you want to get behind? We can talk about that through the show this morning. In the bond market, 2s, 10s and 30s. The focus on the 2s. I talked about the towel being at the front end of the yield curve yesterday. For a lot of people in this market, this was a Federal Reserve that was still going to keep going to hike interest rates next month. We started to build up the front end again, back through 160 on 2s. And that spread between 2s and 10s, Lisa, we're in the 30s again. Narrower, narrower, narrower. That curve is flatter, flatter, flatter. When was the last time we were this flat?
Back in the beginning of 2020, before the pandemic, or as it began to gain steam, we heard from Mohamed El-Erian this morning talking about how the Fed will be paying attention to this. So how much will this actually deter them from moving as fast as some people expect?
They haven't even hiked once yet. Not once.
They're still buying bonds.
We're already talking about that. I thought they finished soon.
They do. They finish March 9th, I think.
Just unbelievable to get your head around this. 10s at the moment. Where are we? 10-year yield at 197.20. That's the US bond market. I want to go down south to the southern hemisphere and talk about New Zealand. The New Zealand Central Bank made a move overnight, but it made a move about the destination on rates in the forecast. And that's going to be increasingly important for so many of you. Not about the start of the journey, not necessarily about the pace, but the endpoint, the destination. And Tom, the destination for this central bank has changed. They go from 250 to 325 for year-end next year. And as we start to think about where a hawkish surprise might come from, that's where it might come from. Do they change the ultimate destination at the Federal Reserve for how far they're willing to take this?
Oh, there's a selected group of banks here that try to get out front where they say we are not emerging markets, we are fully developed economies. And New Zealand is one of those. And as you mentioned earlier, John, there's a heritage of New Zealand getting out front.
The RBNZ, one to watch. That's the cross-asset price action. Let's get you some single names. Do you like that, Tom? Do you like that?
Romain says Z because he's
your morning movers with Romain. Good morning, Romain.
All right, we'll take a look from A to Z here. And we talk about, of course, the big drawdown that we saw yesterday with the S&P 500 closing 10% down from that all-time high. And a lot of that, of course, has to do with the big drawdown that we've seen in tech stocks here. And of course, when you go back to the all-time highs that we had in late November and in early January here, we're pretty significantly below that. The NASDAQ 100 down 17% from that all-time all-time high. Apple down about 10% from its all-time high. Tesla down 33%. Microsoft down 16%, though. Interesting note out by the folks over at Goldman Sachs that looked at a lot of the 13F filings and showed that there was a significant tilt to some of the value names and a shunning of some of these growthier tech stock names. There's a competing note out by Katie Huberty over at Morgan Stanley that said that same data could actually be a contrarian signal to come back in and buy. All of the major tech stocks right now are higher here in the pre-market. Apple up 1%, Tesla up almost 2%, Microsoft up 1% as well. It'd be interesting to see if these drawdowns have finally reached some semblance of a bottom and whether that's going to be enough here to provide a little bit of lift to this market amidst all the geopolitical issues swirling around. We are still getting earnings out there. We did get Lowe's earnings a little bit earlier this morning. A beat and a raise quarter for the company made even more significant by the fact that its competitor Home Depot yesterday missed pretty big here. Those shares up about 2.5% on Lowe's. We're getting TJX earnings crossing the wire just now. The shares down slightly by 2.8% right now. They missed here on some of the revenue numbers, so they did beat on EPS. However, they did provide a guidance that did come up just a little bit light. We should point out for the quarter they had about $14 billion in sales. That was a little less than what the street was looking for. Comp sales growth, the forecast for the quarter, going to be about 1 to 3%, also a little bit less than what the street was looking for. And after the bell tonight, we're going to get some more earnings out of some of the retailers and e-commerce companies, including eBay. Those shares slightly higher here in the pre-market.
Romaine, thank you so much. And again, the close this afternoon to sharpen up here the back end of this earnings season. Right now in bonds and with an incredibly smart noted credit size is Winnie Caesar, Global Head of Strategy. And Winnie, I love what you say about capturing little bits of movement here where it's not about yield change, but it's trying to find in fixed income where price will go up. Where is that? What part of fixed income do I find little bits of price moving up?
Good morning, everyone. Thanks for having me. That's a great point. And what we've noticed is the belly of the curve in investment grade, you're actually now trading at a discount to par, which very rarely happens, right? I mean, usually in the investment grade market, investors are going to expect to be made whole at par. And you don't see these discounts outside of very stressed period of times all that often. And so we are recommending that investors take a look at the belly of the curve. And then also in high yield, we've now started to see bond prices trade at a discount to par. And that market is a much different market than it was in the mid-2000s. And really the leverage to energy in that market is a fairly positive thing with all of the geopolitical risks and kind of Russia-Ukraine headlines.
We've got some major jargon going on here, folks. CFA level 1, the belly of the curve is identifiable. But Winnie, seriously here, how do you define the belly of the curve?
Yes, I did have the jargon speak. So we like the 5 to 10 year segment of the curve. So not really long duration, you know, that 30-year segment of the curve, but just extending a little bit so you don't have a really kind of inflated front end portfolio into the point of curve where you actually see a lot of new issue, which also helps when you're looking for liquidity and adding to portfolios and sizes.
Winnie, taking a look at the broader credit complex, a lot of people say we are not heading toward another credit crisis by any means because companies have done such a good job of kicking the can down the road, of extending out their maturities, of getting their financing as cheap as possible. But are you starting to see that window for cheap financing really close up?
What we're beginning to see is the opportunistic window shutting. So for those issuers who are really trying to aggressively address capital structures and refinance, I think that window has closed. We've already hit the all-time low point in yields in both investment grade and high yield. And now it's about kind of picking your spots where those types of opportunities still make sense. The energy sector is one such sector where we think that refinancing is probably going to continue because you've had a bit of a later recovery in that sector for issuers, and borrowing costs are still pretty attractive, all things considered. Now, overall, we don't think that the move in yields has become a threat to either investment grade or high yield quite yet. Companies can still borrow at very low levels overall, and this kind of slowdown in new issue supply that's just a natural effect of volatility in the market is actually very constructive technically for the market.
Winnie, there are two issues here, and this is something a lot of people have been trying to wrap their heads around. On one hand, you could potentially get a rates-driven sell-off in the credit market. At what point does that lead to some sort of corporate credit response? In other words, it's not going to affect these corporations because their financing is so cheap and they don't need more money. So at what point are we kind of immunized? Could you see a pretty big sell-off in the valuations of some of these credits, but even see companies with very solid balance sheets?
So what you ultimately need to have is this kind of spiral of rates volatility driving spread volatility, which drives really negative total return losses in portfolios. And then when investors go and look at their, Q1 22 statements and say, oh my gosh, why are my investment grade bonds down 7% this quarter? And then they start selling into that down market, and you get this kind of spiral of spreads widening more, and liquidity really gets cut off from the market. Now, given the amount of cash still on the sidelines, we feel fairly confident that there will be a clearing level where institutions step back in and say, oh, actually, 10-year credit looks pretty attractive at 3.5%, but we haven't quite reached that point yet. We were thinking 3 to 3.5% in investment grade as the level where institutional investors would kind of step back in. But given the Russia-Ukraine headlines, I think that that's keeping people kind of sitting on their cash a little bit longer than we would have expected.
Winnie, thank you. As always, good to hear from you. Winnie Caesar there of Credit Size. Tom, I know you're looking at one currency pair right now, dollar ruble. We saw 80 on Monday. We saw 80 on Tuesday. We're about to see 80 again at 79.98.
It's a leg up to 80. A print of 81, a weaker ruble, John, is a huge, huge deal. We're not there yet. And I'm not even going to speculate why we're seeing 77 through to 78. And, of course, here at any moment, 79.99 on ruble. I don't want to speculate on the why of that, John, but I would just say to go through weaker and to print 81.XX would be a huge signal.
Stronger ruble yesterday, Lisa, weaker ruble this morning. We've seen life above 80 before. Didn't last very long.
No, people are, though, saying this time might be different and that their economy is that much more isolated, and it seems like Vladimir Putin is not necessarily, no pun intended, trumped by the economic feedback loop on his economy. He wants something different, and that's going to lead to record weakness in the ruble. That's what I keep reading about anyway.
What, that we get more weakness?
Yeah, it's, everyone's saying...
Even with crude prices up here in the 90s?
Which is sort of interesting. And actually, some of the moves that I'm seeing in currencies that really don't make sense to me. I mean, for example, the Chinese currency, how does that make sense?
Well,
the fact that it's the strongest going back?
I'm with you.
That 2016?
That didn't make sense to me all of last year.
I mean, here we go. It's like they're weakening, they're easing their currency, they're easing their monetary policy, going in the exact opposite direction, and they're seeing the most currency strength going back to 2016 versus the dollar. It's
a really interesting time. On dollar ruble right now, we call it 80 yet, Tom. 79.99. Do you want to leave that there and wait? 80 very briefly.
I think it's all there. And we haven't even mentioned this morning, John. The strength in renminbi is stunning. Onshore yuan. I mean, it gave me pause this morning to see it. I'm looking for it on the screen. 6.3167, John. That's a wow statistic of strong yuan.
It's nice that you and Bramo are on the same page this morning, Tom.
Well, it's notable.
Yeah. It's notable. I'm with you. Let's set the stage for you this morning. A good morning to you all at home, wondering what on earth we're doing. A lot of these are inside jokes, which don't work on TV or radio. I don't know why we do them. Futures up 0.8% on the S&P, on the Nasdaq up 1.2%. Yields up 4 basis points to 197.73. Tom looking at dollar ruble, very close to 80. Crude 91.50, we're down 0.5%. In the FX market for euro dollar, 113.44. We've talked about what it means for the Fed. What does all this mean for the ECB and their next move? From New York City, for our audience worldwide, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia's President Vladimir Putin says he's ready to pursue diplomatic solutions in the Ukraine crisis, but only if Russia's interests and security are guaranteed. Putin spoke after the US and its allies agreed on a first set of economic sanctions against Moscow for its actions in Ukraine. Apollo Funds has agreed to buy auto parts maker Tenneco. The all-cash deal has an enterprise valuation of about $7.1 billion, including debt. That represents a 100% premium to Tenneco's closing price yesterday. Rio Tinto Group has established itself as one of the big winners in the global economic rebound. The world's second largest miner delivered its highest profits ever and announced another massive dividend, $7.7 billion.
We have started the year well, but I'm not in the game of predicting commodity prices. They are very volatile. But short term, there's a good demand from China, and longer term, for a company like Rio Tinto, the metals and minerals that we are producing are really being helped by the energy transition.
Rio Tinto's most important commodity, iron ore, hit record prices last year, and so did copper. In Canada, banks froze about $6.1 million in just over 200 accounts under emergency powers meant to end those truckers' protests. That's according to a government official. Prime Minister Justin Trudeau invoked the powers last week to cut off funding to protest leaders. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Plan A is to utilize every tool of diplomacy to deter Russia and prevent further escalation. And if that fails, Plan B is to fight for every inch of our land.
The Ukrainian foreign minister yesterday alongside Secretary Blinken. Secretary Blinken cancelling his meeting with Foreign Minister Sergei Lavrov later this week. Futures are bouncing this morning, and good morning to you. Up 0.75% on the S&P, up more than 1% on the Nasdaq. That's a tidy bounce from yesterday's losses, Tom. A 10% move from the highs of early January. Correction territory, so-called correction territory. Yields higher on 10s, 197.38. Yields up 3 or 4 basis points. This curve is flatter with a bigger move on 2s. The curve down, Tom, to 36.6. The spread between 2s and 10s.
John, ruble off of dollar. Dollar ruble is called weakens through to 80 into 80.16 right now, which means we need perspective here 6 years before what we saw in Crimea 2008. Kriti Gupta on ruble. Kriti, what do you have?
Yeah, Tom, we talk about the ruble all the time as this gauge, essentially, for this geopolitical tensions. We got to check back into history, like you mentioned, though, past Crimea into 2008, when you saw that initial surge for the dollar against the ruble, that initial weakening, I should say, for the ruble, with the essentially recognition of the breakaway regions in Abkhazia and South Ossetia. This, of course, Georgia. This is the first time that you actually saw Russia kind of have these tensions with some of its Eastern Bloc states. And that's really what set the tone for this kind of volatility in the ruble that you then saw manifest and magnify 6 years later with Crimea. And that's really where you get the $80 significant level. And that's really what my chart of the day shows. Essentially, the ruble throughout history in 2014, essentially on an intraday basis, not closing it, but going to that 80 level and then kind of sticking there and bouncing back and going all the way really to 2020. And then, of course, right now, bouncing against that level, we're trading at 80.21 on the ruble.
Kriti, thank you so much. And futures up 31, Dow futures 205, doing nicely today. Right now, on our domestic nature, Greg Valliere joins us, Chief U.S. Policy Strategist at AGF. Greg, an open question. How'd the president do yesterday?
Fair, not great. He conceded that this was an invasion. But I think most people in this town were a little bit surprised at how mild his sanctions were. Now, the White House pushback is that they think that the Russians may do more and they want to say some things in reserve for more sanctions. But I'd say it did not get rave reviews.
It did not get rave reviews, but then there is the path forward where Mr. Putin will respond. Greg, a loaded question, and this goes to our agedness, where we remember the great miscalculations on intelligence, a couple go-arounds on Russia. Do you have confidence that America has quality intelligence on what the Kremlin's doing?
Yes, I do. I think we're listening to them. I'm not sure if we have a mole or not, or listening devices, but I think we are listening to them. In the intelligence community, there were reports in the last couple of weeks that were astonishingly accurate, forecasting what the Russians would do, and the forecast came true. So yes, Tom, I think we have good intelligence.
So putting all this together and talking about the volatility, you made a point that I thought was pretty stark, that you said suddenly chances of a recession by next winter are no longer zero. Can you walk us through how we get there?
Yeah, I think, obviously, as we all know, monetary policy will get more restrictive. That's an easy call. I think the less appreciated story is fiscal policy. I think we're now going to sharply reduce deficits. We're going to go from $3 trillion down to $1 trillion. $1 trillion is still a lot of money, but that's a big drop in 1 year. And if the Republicans take the House, which I think is quite likely, there will be an even more austere mood in Congress on spending. So both monetary and fiscal policy, I think, would contribute to a weaker economy.
But how does Russia factor into that, Greg?
Oh, gasoline. I think that's probably the main thing, energy, and just the uncertainty. I think that in this city, you've got factions forming. You've got Trump saying Putin's great yesterday. You've got Democrats not happy about all the sanctions because of gasoline prices. And you've got hawks. You've got people like Lindsey Graham who want to spend a lot more and have a lot more sanctions. So with this kind of confusion, this cacophony of suggestions, that doesn't help the economic outlook.
Although, does the former President Trump really represent the Republican view? I mean, honestly, how much dissonance is there when it comes to the domestic approach to Ukraine and the domestic approach, frankly, to Vladimir Putin?
Oh, I think Trump has people who'd follow him off a bridge. And his comments yesterday were astonishing, saying what Putin is doing is genius. I'm sure there already were some Republicans who agreed with Trump on that. I think it's a minority view. I think the Lindsey Graham view would dominate. If John McCain were alive, he would talk about much tougher sanctions, but we haven't seen those tough sanctions yet.
Greg, what is the difference here of our isolationists now? I would suggest the former president speaks as an arch isolationist, but it's different than the 30s and the Chicago Tribune isolationism of the Midwest. What's different now?
Oh, I think we just can't stick our heads in the sand. And I think what's different this time around is that Joe Biden, who I give credit to, has united NATO. I think this has been a big surprise to Putin. I don't think he expected it, especially with Germany. And I think a unified NATO is a real change.
It's an important change, Greg, and I think most people agree with you because it's playing out before our eyes. They're all using the same language, the same tone, the same words. That's really important. Can they actually go through with game-changing sanctions, though, Greg? And I wonder if that's where the divisions actually start to emerge. This is phase one. They've called it tranche one of the effort. Do you think the divisions are going to come further down the road?
Yes, I think there's more, John. I think there'll be more military aid. There'll be more sanctions on Russian debt. I think that would come. So there's a long list of things that we can impose on Putin. And again, I don't think he was prepared for sanctions quite as strong as the ones he'll get over the next few weeks. He didn't get it yesterday, but I think it's coming.
Which one's the one you're looking for, Greg? The sanction that you think is going to be the one that takes him by surprise?
The Russians' ability to float their own debt. I think they're going to have a hard time in Western financial circles selling their paper, and I think that would be a surprise. The other thing, obviously, is much more military aid.
Greg Valliere of AGF Investments, thank you, sir. Of course, Lisa, as you know, the Russians at the moment running a budget surplus for much of the last 12 months. So at the moment, this isn't a major deal for them. For many people, they've been preparing for this moment as well. But certainly, if you can, you'd like to tap the debt market.
How many essays, though, have you read about Vladimir Putin not necessarily following a rational course of action? How many people trying to understand exactly what his goals are? How does this translate into sanctions that work? What is deterrence?
Are you suggesting that NATO is now dealing with an irrational actor?
There have been a number of reports basically highlighting if his goal is power at the expense of all else. How do you deal with that?
Tom, what's your take on that?
My take on it is I don't want to comment. I agree with Lisa that the reports are out there, but it is speculation from a distance, and it's the mystery and the aloneness of Mr. Putin.
No mystery about the bounce this morning. Up 0.8% on the S&P, on the Nasdaq up more than 1 full percentage point. On 10s approaching 2 again, 197.90 on a 10-year yield at 4 basis points. From New York, this is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor, y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las mediciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The Fed is in a box, and people don't know what to do.
The market is looking at, okay, is the Fed behind the curve in real terms?
We don't think that they're going to start off with a 50 basis point rate hike.
The preferred strategy is a steady pace of 25 basis point rate increases.
If the market is pricing 50 basis points, the Fed should walk through that door.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us on radio, on television. And the message this morning within the quiet of the headlines, John, a bounce, a recovering set of markets.
Yields are moving with it, though, Tom. So what do we have? Correction territory at the close yesterday on the S&P. We bounced back, but yields are pushing higher again at the front end and right the way through the curve. Your curve is flatter. We've talked about this through the morning, TK. 210s, 37.
Let's go right there. It's going to be the focus with our guest here in a matter of minutes. John, the curve flattening at 36 basis points, distant from zero, distant from inversion, but it's that rate of change, the speed that we move at.
We're not far away, so let's talk about speed. Does speed kill? We're talking about interest rate hikes, Tom, one at every meeting. If you're JP Morgan, one at every meeting going into the first quarter of next year. Bank of America say 7. Where does this top out? And what's more important, Tom, the pace or ultimately the destination?
We're going to have to see. I'm on the ruble watch right now, 80.30 on ruble. That's a weaker ruble in the last hour. Futures up 34. We'll do the data in a moment. Lisa Abramowitz, what matters is the auction watch. Fold the auction action this afternoon, Lisa, into curve flattening.
Well, it's the same point that John just made, right? What's the longer-term trajectory for rates? What's the longer-term trajectory for growth? And I keep coming back to the buy-the-dip moment that people are pointing at. It is because people are not now pricing in necessarily the degree of oil shock, yet Does it matter if it's an immediate shock or a slow grind of high prices that just grind people down and diminish some of the consumer appetite?
To both of you, Lisa, let me start with you. What's the buy the dip in bonds? Have we seen buy the dip in bonds, price up, yield down?
Some people are saying that if you go into certain very long duration investment grade bonds, people are looking at buying the dip in duration, basically saying that 10-year yields are not going to climb that much because we're not emerging from that low growth, low inflation kind of regime.
Okay, slam it to full faith and credit, John, on Draghi's Italy. Are we buying the dip in Italy?
That gets so difficult, Tom. That gets so difficult. I'm with you. What does Europe face right now? Faces potentially a growth slowdown. And you talk about an energy shock, Tom. We've already had one in Europe. Let's be very clear about that. Over the last 12 months, we have already had one, with gas prices absolutely surging. So where does the ECB sit here, and what do they have to do? Well, to raise interest rates, they have to unwind QE first. And we're about to find out if BTBs, how they operate in a market where the ECB doesn't have a big presence in anymore, Tom. And we've learnt in the past that it's not much of a sovereign, it's more of a hybrid and closer to a credit.
John, I'm going to tear up here. I mean, it's too emotional, folks. We don't make this up. Like, there's no script. I go to Italian papers, Pharaoh with his knowledge nails it, and in the control room, Chart Banner puts up there, on radio you don't see it, but he puts up there that whatever BTB Italian, I don't even know what it is. John, it's like we're a Swiss watch.
I didn't see it. It's there now. 193 on 10s.
It is.
There you go.
We're like a Swiss watch.
Is that what we are?
Speaking of Swiss watch, I'll do the data check to start. Euro Swissy. I'm going to call it indeterminate, but certainly the fear of strong Swiss franc is not out there. John?
I think other people have got other descriptions for us, Tom. It's not a Swiss watch. Futures up 0.8% on the S&P, on the NASDAQ, up a little more than 1%. You had plenty of tang over the weekend. Yields up 4 basis points on 10s to 197.73. We're back away on crude just a bit, Tom. South of 92, 91. 79.
Well timed. We start strong this hour with Marvin Lowe, Senior Global Market Strategist at State Street, because his research note goes to the heart of our discussion domestically this morning. And Marvin, it's simple. It's about the relationship of the 2 and the 10-year. Which is of more knowledge right now, the 2-year yield or the 10-year yield on the path to curve flattening?
You know what? We've had a bear flattening. I think that that's ultimately going to continue. It really does signal the quandary that the Fed is in. The normal response function of the Fed being able to take a step back because data is changing, because geopolitical risk is potentially tapping and pulling out consumer enthusiasm, is something that they can't take into consideration right now. And it's really hard to see how we get to a point where we don't continue to flatten the curve. And ultimately, that indicates increased either policy mistakes and or increased concerns around recession.
What reason do you have to believe, Marvin, that the Federal Reserve would ignore it, would keep on moving, would keep on hiking?
You know what? It's what you and we have been talking about for the last year. Ultimately, it's inflation. They do need to start to address inflation. I've made the argument that they have, for the most part, been actively managing the process since October with their pivot, if you will. Mortgage rates are 100 basis points plus higher than where we were a few months ago. And we do see mortgage applications starting to fall, but they need to put some action behind all of that signaling. And, you know, March is a fait accompli. And it's really a function of how they signal for the rest of this year within that dots plot, whether you like it or not. And what they do with their projections for the remainder of 2022 and into 2023.
Marvin, it's the dot plot that gets my attention, and it's the dot at the long end of the chart. How far they're willing to push this. From a risk asset perspective, what's more important, the pace of hikes or the ultimate destination?
I mean, I think they're both important. You know, I don't want to be flippant around that. I do think that given the view that they're on autopilot to a certain degree for the next several hikes, it is where we wind up that's most important for risk assets. You've got different durations in different markets, so you need to kind of parse that a bit. Where U.S. has more tech, has more growth associated with that, you are more concerned with the path. Europe has a little bit more value, a little less duration, so maybe kind of that belly of the curve gives you a little bit more signaling. And of course, what the Fed does and what the ECB does is key to that story from a relationship perspective.
When you look at the longer term rate, though, you do think, and a lot of people do think, that Fed actions, ECB actions, will have an impact on that longer term run rate. But there have been a number of studies that show a much less direct relationship between Fed policy, frankly, and controlling inflation in any way, especially once it's gotten to where it is. So what gives you faith that the Fed does have control at this point at a time when inflation is running hot and people are foreseeing a problem in the economy longer term, regardless of what the Fed does?
Yeah, absolutely. And that really is the potential challenge that the Fed has, is their ability to ultimately influence that inflation discussion when it's not the normal set of circumstances that are driving the inflation story at this point. Certainly shortages and the supply chain is still a big part of this. Energy is something that they would normally look past. However, when you put them all together, you're in an environment where it is going to tap consumer demand. However, increasing rates will influence that. Higher gas prices, higher shelter costs will impact that, but they won't impact the supply chain. And we should look into regime change as a potential tail risk in this discussion, but certainly, we also do think that some of these supply chain issues will work their way out, and lower demand as a result of all of these other things coming together does get 2023 into a position where their actions now are going to have an impact.
What's your highest conviction right now, Marvin, in markets?
You know what? I've been flattening of the curve for a while. I'm going to stick with that. It's the one thing that seems to be clear. There are so many cross currents to deal with now that, unfortunately, that is something that will continue. And I would say that inversion is something that might be hard to avoid as we get later into this year.
As many people have said, maybe before year end. Like you, Marvin. Thank you, sir. Marvin Lowe there of State Street, as always. Thank you very much, sir. Getting some headlines from Interfax. Want to bring you very quickly. Russia will give a strong response to US sanctions. The Interfax report goes on to say, Tom, they cite Russian Foreign Ministry on the sanctions response, that Russia will give a strong response to the US sanctions announced in the last 24 hours.
Just moments ago, John, United Kingdom to convene meetings of banks, regulator on Russian sanctions. I don't know if they do that at the bar of the Ned, John, but that'd be as good a place as any. I mean, what do you say to banks and regulator on Russian sanctions?
And the media regulator looking at RT as well, Tom, and what they're calling a disinformation campaign in the UK and maybe taking RT off the air in the United Kingdom, Tom. Those reports coming. And that was talked about in PMQs in the last hour too.
And it underscores, John, the next step here as we await. And let's be clear here. It is a holiday in Russia, right?
It is a holiday today, yeah.
Okay, I guess that bears a moment here. I don't know, John. I see a better stock market. I got a Dow lift. I got SPX lift. I got the VIX in a stick. Ruble even gave way on those Russian headlines.
It's a strong bounce. It's a strong bounce. Lisa, you see it on the Nasdaq up more than 1%. On the S&P, up 8 or 9/10%.
Well, what was it? What's the exposure in the S&P to Russia right now?
The BFA stat, 0.1%.
0.000. I mean, honestly,
0.1.
at a certain point, the direct ramifications are negligible for a lot of developed market assets. And there has been so much isolation of Russia at this point that it really comes down to the oil and gas transmission mechanism, which is a lot harder to game out. And so I think that that's what you're feeling in markets is a bit of a sigh of relief that we didn't see the worst case scenario just yet.
And John, what's so important here is to put it in perspective. The Russian GDP, I think it's a little bit bigger than New York State, just to give you an idea. Of course, with a huge oil impact there, maybe this year it'll be larger because oil's at $90 a barrel. But the per capita GDP, John, which we mentioned 5, 6, 7 days ago, bears repeating. You look at Germany, 47,000. Finland, just below that as well, 40 whatever thousand. And Russia's way down at a 10,000 level.
That speaks to the failure of Russian leadership to really build out the economy over the last few decades. What it doesn't speak to is just how dependent Europeans are on some of the things they do produce in Russia, namely energy. And Lisa used some interesting language, and it's important to recognize the word direct. The direct exposure into the S&P is 0.1%. Russian sales, 0.1%. The indirect exposure to energy prices, to a potential recession in Europe, to a potential deceleration in consumer spending, maybe even contraction, they're the things that ultimately matter to us, which is why it's tremendously difficult to price, one, and two, ultimately to try and get your hands around what this means for the Federal Reserve as well next month and beyond. Futures up 0.8% on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Rishika Gupta. Ukraine is moving towards declaring a nationwide state of emergency. That would allow Ukrainian officials to impose restrictions on movement and media following Russia's recognition of two self-proclaimed republics in Ukraine. Meanwhile, President Biden's first round of sanctions on Russia was seen as underwhelming. Members of Congress from both parties want him to do more. And the fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to the Bloomberg billionaires list, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll the escalating virus outbreak has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year. That's after growing 6.4% in 2021. And Lowe's is signaling that Americans' increased spending on home improvement projects still has room to grow. The chain posted better than expected quarterly sales and raised its outlook for the full year. Lowe's also said operating margin improvement in the fourth quarter. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
If there is a full-blown invasion, as U.S. intelligence seems to be warning, I also think Putin will go further. I don't buy what I'm seeing in some investment research that we're going to see a de-escalation. I see the opposite. We'll see another round of sanctions. We are in what Clausewitz called the fog of war, and Russia has nuclear weapons.
In the fog of war, the words of Tina Fordham, the Avonhurst head of global political strategy, with futures this morning up 0.8%. Good morning to you all. We do have a bounce on the Nasdaq, up a little more than 1 full percentage point. Yields up 4 basis points to 197.73. The curve's flatter. Crude backs away, down 0.2 to 91.71. And euro dollar, firmer euro, weaker dollar here on that currency pair anyway. Euro dollar 113.44. That's some of the price action. Here are some of the headlines from the Ukrainian president speaking right now to reporters, Tom, expecting more sanctions on Russia. That coming from Zelensky just moments ago.
Yeah, it's out there now. And there is a set of headlines from Europe. We'll continue to keep you abreast of these right now. But what we've got is the markets with a nice lift. Right now, with clarity, Javier Blas, of course, with his wonderful book and with Bloomberg Opinion writing on oil worldwide. Javier, I want you to give us an update on how Mr. Putin is paid when he exports oil, natural gas, and the rest. I understand oil's dollar denominated. Russia and Rosneft made a shift to euros. But what's the real story? Is it in euros, dollars, or rubles that he receives his larder for oil?
It's mostly in dollars. Russia still sells most of his crude oil and refined products in US dollars. Some of it is also in euros, and then the central bank in Russia converts everything into local currency, into the ruble. A lot of the sector is controlled by proxies of the Kremlin, by state-owned companies or companies where the state has a lot of influence. So at the end of the day, the money that natural resources exports of Russia goes into the Russian economy, and that really leaves the aims of Vladimir Putin.
Do you have, like you do on, say, the price that Saudi Arabia needs to have a fiscally successful budget, do you have in your head dollar or euro ruble that matters for Mr. Putin as we see ruble unravel?
I think that at the current prices of oil, he's just doing fine. $75 oil, Russia is going to do very well, and I think that Russia can survive very well also with oil at $60. Probably that's more than enough.
Javier, how much confidence does Russia have, does Vladimir Putin have, that Germany cannot come through with its promise that eventually it will be independent of some of the gas resources from Russia, and that they have other supplies?
I think that the key question there is eventually. Eventually is a very long time in foreign policy, and when you are fighting effectively an economic war with Russia, can Germany say goodbye to Russian oil over the next 15 to 20 years? Yes, it can. Can it do it in the next couple of years, what is really matters? No, there is absolutely no way that Germany can do that unless you are going to be shutting down huge swatches of the German economy. So in the short term, that is an impossibility, and Putin knows that.
So given that, are you a little bit surprised at, I don't want to say the complacency, but the sigh of at least a pause here in the oil markets as we reassess the landscape, the sense that perhaps we can avoid that oil shock that a lot of people were gaming out yesterday?
Well, I think that the White House has made very clear that for now it's not targeting oil and gas exports. The Europeans also made the same signal. They don't want to go there. And Putin so far is signaling that he doesn't want either to use oil and gas as a weapon in this conflict. So that's the reason that the market really pared down. And in gas in particular, let's not forget, we are at the very end of February. It's very nice weather here in London. We are out of the wars of gas consumption in Europe. In another month, gas consumption in Europe will really collapse, as every year does, because the springtime arrives. We use in Europe a lot of gas for power generation for the industry, but the big consumption center is heating, household heating. And therefore, the gas market, even if something really bad happens right now, is not the same happening at the very end of February, and also with a very relatively mild winter, that if something bad has happened just around Christmas.
Javier, how quickly could we close a deal with Iran?
I think that we may have a deal. I'm going to go here out of a limb. I think that either we have a deal by the weekend or very early next week, or we just simply don't have a deal.
Does that move the dial enough?
It needs to happen in the next week.
Javier, if that happened in the next week, talk to me about how much capacity they have, how quickly they could bring that back online and export into the market. What are we talking about? What kind of numbers, and does it make a difference?
It does a hell of a difference, and the world really needs Iranian oil if we are not going to see much higher prices from here. Well, the first step is that Iran has a lot of oil on storage, both floating in tankers and also onshore, at home in Iran and also overseas in China. That oil can hit the market almost immediately, within 24 hours. The moment that Iran is allowed within the new deal to sell the oil, that oil is going to be hitting the market. How much oil is there? There are different measures, but anywhere between 60 and 100 million barrels on storage that could hit the market very, very quickly. Then how quickly Iran can ramp up. I will not bet against Iran. Last time, the market was expecting 1 million barrels will take a year. It took only 6 months. I don't see why this time is going to be different. So another 1 million barrels in 6 months.
Javier, I wanted to give you the opportunity to issue a correction as well if you wanted to. A man from Spain in late February saying the weather's good in London. Javier, is the weather actually good in London?
It's better than I expected this morning.
OK. You didn't take it back quite. Javier Blas there of Bloomberg Opinion. The weather's never good in London at the end of February. But anyway, I digress. Crude, 91.87 on WTI. Brent Tom, 96.93. And you heard the words there from Javier Blas. We either get a deal done before next weekend with Iran, or we don't get a deal done at all.
And it's the delicious soup that we're in. And I'm going to go back to 6 o'clock this morning, John, with the release of the Bruce Kasman note with Kasman and Aziz at J.P. Morgan, where they aggressively walk back from the not call, but the fan distribution that gets you to $150 a barrel oil. They just say there's too many supply items out there, as Javier outlined, that we're not going to go there. We're going to go to something lower, a better price.
Well, let's talk about a better price, because leadership here in America, Lisa, they don't want it in the hundreds for sure. They don't want it in the 90s either.
But they haven't really given any policy prescription that can avoid getting there should there be that oil shock. And so many people are counting on demand actually waning as we get into the latter part of the year, that basically you're going to get that big upsurge where everyone wants to travel post-pandemic, and then it'll calm down. You know, so many variables to determine how much is going to be necessary in the meantime before we normalize.
Or get stuck in Atlanta on the way to going somewhere and not being able to travel anywhere. You never finished the story for the audience.
Oh, I'm sure.
So you went down to Atlanta, got stuck there
for a night.
For a night, and then had to come back up to New York.
It was an amazing vacation.
And that was your long weekend
with kids, which was really fun.
Are they refunding you?
They are refunding me, but you know, it was haggard.
Would you like to give the airline a shout out?
I don't do that.
Well, just a shout.
Just say,
is it a hub of a major airline that is in Atlanta?
Yes, it is, and it has some relevance to some of the COVID acronyms.
Okay, well that's good to know. Tom, I think that was fairly discreet, wasn't it?
Yeah,
that's allowed.
The Four Seasons in Atlanta is just phenomenal.
From New York, this is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Live from New York City on TV and radio, this is Bloomberg with your equity market bouncing up 0.7% on the S&P, and the Nasdaq up a little more than 1 full percentage point. Yields are higher too, up 3 basis points on 10s to 197. Let's call it 197, 196.86 to be precise. Crude backs away down 0.1% and 91.78. The focus at the moment, there are many. Here's one: sanctions out of Europe on Russia. This from the Polish president, Tom, calling on Russia to de-escalate tensions and withdraw troops. He goes on to say he calls for serious sanctions against Russia, which implies he thinks what we've heard so far, Tom, is not serious enough.
And the movement from Kiev west to Lviv, and of course on the Polish border as well. It was an essay in the Financial Times a number of days ago from Jeffrey Sachs of Columbia University, talking not of appeasement, but how do we, after the debris of all this, move forward with Russia? The authority of Jeff Sachs here is truly, truly enormous, and goes back to January of 1994 with his advisement to a Yeltsin regime that then changed to something different. When Jeff Sachs got off the airplane at JFK, that interview was shocking. Professor Sachs joins us, of course, of Columbia University this morning. Jeff Sachs, we all got Boris Yeltsin wrong. Do we get Mr. Putin wrong?
Well, I think we've got our own policies not right, and we have been on a very provocative course of really NATO enlargement seen by the Russian side as encircling Russia, a point that has been made actually for more than 30 years, first by the Soviet Union, by Mr. Gorbachev, and then by President Yeltsin, now by Putin. We don't want to think about that in the U.S. We don't want to discuss it. We're dishonest because the West, the leaders said clearly to Mr. Gorbachev and to Putin, and to Yeltsin, no enlargement to the East. Then Clinton decided because of the pressures domestically and from Central European countries that NATO would enlarge. It was predicted by many at the time, including Clinton's own defense secretary, William Perry, that this was a very dangerous and provocative move. And now we're here. We need diplomacy on our side. All we're doing right now is sacrificing Ukraine in the name of a theory. Because if you talk to senior officials, they say, oh, there's no way Ukraine's actually going to join NATO. But then they say publicly, of course, Ukraine has every right to join NATO. If you put the two together, it's the worst combination for Ukraine's security.
Jeff, what's so important here is I've got Jeff Sachs, the liberal from Columbia, on the same page as Mearsheimer of Chicago, the arch-conservative Realpolitik. I mean, that is truly extraordinary. To steal a phrase from a younger Jeff Sachs, what is the diplomatic shock therapy to jumpstart a legitimate dialogue to come to a good resolution here?
We need basic points agreed. Russia out of Ukraine, Ukraine's sovereignty assured, NATO not enlarging into Ukraine, the Minsk II agreement being implemented. 4 basic points. They're not so hard to come to the table, except actually the difficulty is on the NATO side. Well, NATO says, oh, everyone has the right to join, as if it's some great, somehow moral right to have a military alliance that increasingly runs up against the border of an antagonist. That's not a right. That's just imprudent is what it is.
But Jeffrey, you're talking about diplomacy. Can we have diplomacy if people question whether Vladimir Putin is a rational actor?
It's a great question. You cannot test that theory if you don't have diplomacy. What Putin said in his speech a couple of days ago is, we called for new security arrangements. The United States would not even discuss them. That is the truth. The U.S. said, first moment, NATO is open for enlargement. It is the right of Ukraine. Well, I don't call that smart diplomacy. And then when the response is a failure, which was predictable, we say, well, nothing could have worked. My view is we should try real diplomacy. It might not work. It might start with the premise that the counterpart is just a madman. It's true in negotiations throughout history, is if you start with the premise that the counterpart is just a madman, if you start with that premise, you will absolutely end up in conflict. There's no way to reach an agreement on that starting point. Yeah. It may be true that the counterpart isn't interested in negotiation, but you can't find that out by talking to yourself. So you have to talk to the other side.
Jeffrey, we're talking tactics right now and how to avoid some sort of altercation, but longer-term strategy, you specialize in sustainability. And I do wonder what type of investment would be necessary now in order to immunize both the U.S. and, frankly, even more so the European economies from the vulnerability of dependency on Russia for oil and gas.
The truth is we ought to be dependent overwhelmingly on our sunshine. That's the whole idea of the decarbonization agenda, which is a massive increase of solar and wind power to replace fossil fuels. Why are we in yet another fossil fuel crisis? By the way, this is where I entered economics. I won't tell you how many decades ago, writing about the oil shocks of the 1970s. We can get away from that because if we're relying on our own sunshine with solar fields or on our offshore wind or on our wind in the U.S. Midwest, we are not going to be suffering what we're going to be suffering right now. So that's actually a pretty straightforward approach and the one we ought to be taking anyway.
Jeff, in the time we've got left, and very importantly, you make the assumption here that the West is talking to itself instead of talking in a more formal diplomacy to the oddities of the Kremlin. The Democratic Party and the liberals of the Democratic Party and progressives all agree are going down in flames at the next election. Whether that's true or not, we'll find out in November. Are the progressives in this nation guilty of talking to themselves and not reaching out for compromise with the Biden moderates or indeed the GOP moderates?
I just think there's a lot of bad strategy going on. I am unimpressed with the diplomacy of this administration. I well, let's just say I'm unimpressed. And I'm unimpressed with the strategy on the domestic policy. Senator Joe Manchin, with whom I often do not agree, put forward a very reasonable proposition: raise taxes, use some of it to reduce the debt, use some of it for the social programs. That's a point of reaching an agreement now.
Why can't the left meet the gentleman from West Virginia? It clearly, it broke for the left. How did it break for the left?
Well, it has to start with the White House, frankly. That's the job of the president and the White House, to coordinate. How you could have this situation and not reach an agreement is really disappointing, frankly, because there is an agreement to be had. Even Senator Manchin sketched it out in the last couple of weeks. I said, okay, here we go. But they don't move. And it's really not so understandable, Tom. It's a good question. I don't have a good answer for it.
Professor, thanks for being with us today. Jeffrey Sachs there, Columbia University. With several arguments there, Tom, and I think the one that's going to get a lot of attention is this idea that somehow NATO has antagonized Russia by pushing NATO membership right up against the border. I want to be very clear on this. We're not talking about Russia threatening Estonia or Latvia or Lithuania, countries that are very close to the Russian border, because they're all NATO members. And I want everyone to go through a thought exercise here as we start to think about the Vladimir Putin argument about all of this. Would this be happening if Ukraine was a NATO member? Would this be happening if there were nuclear weapons still in Ukraine? Would we be going through this right now? Because there are two sleeves across the Russian border, east of Europe, as you know, Tom. Mm-hmm. To the north, there is Estonia, Latvia, and Lithuania. And right now, we consider that to be quite peaceful, don't we? They're NATO members. Then you've got Belarus and Ukraine. Belarus is an extension right now of Russia in the minds of many people, and the tension is in Ukraine. So when I hear this argument, the argument that Vladimir Putin keeps making from the Russian president, echoed by people here in the United States of America, I think we've got to go through that thought exercise ourselves, Tom. There is a peaceful sleeve up against the Russian border. They are NATO members. There is no real threat to them right now, in the same way, relatively speaking, that there is in Ukraine, who is not a NATO member. We've all got to go through that thought exercise and not just jump on this Vladimir Putin bandwagon, that it's somehow the aggression or they've been aggravated by NATO membership pushing up against their border.
This is well in excess of a decade debate. As I mentioned, John Mearsheimer of Chicago, widely considered to be the one that launched this debate over the future of NATO and the very long border with Russia. John, to me, the distinction between the band up north and down south is a warm water port, which is an ancient Russian fixation going back to Peter the Great and certainly Catherine the Great. And the answer is the geography of the moment is the great distinction.
Tom Keene, Lisa Abramovich and Jonathan Ferro. We do have a bounce in this equity market, up 6 or 7/10% on the S&P, up 28 points on the Nasdaq 100, up 1 full percentage point. A bounce back in the equity market, but that flatter curve, Tom, gets your attention, gets Lisa attention, it gets my attention too.
Yeah, and the 5-year auction this afternoon is going to get my attention. I mean, you know, they're going to come in and it's going to be huge.
Well, you mentioned the belly of the curve earlier with Winnie Caesar.
Yes.
And the belly of the curve does get interesting, Lisa, because that's where the rate hike dance further down the road takes place. How far they can push it, for how long can they push it?
Which is the reason why I thought that the flattening in that denomination was particularly interesting, basically highlighting the deteriorating prospects in the near term.
Coming up on the Open, Aaron Brown of PIMCO. Looking forward to that conversation after a 10% correction on the S&P. Is it a correction that you want to buy? From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Rishka Gupta. Russia's President Vladimir Putin says he's ready to pursue diplomatic solutions to the Ukraine crisis, but only if Russia's interests and security are guaranteed. Putin spoke after the US and its allies agreed on a first set of economic sanctions against Moscow for its actions in Ukraine. In Canada, banks froze about $6.1 million in just over 200 accounts under emergency powers meant to end the truckers' protests. That's according to a government official. Prime Minister Justin Trudeau invoked the powers last week to cut off funding to protest leaders. The U.S. Transportation Department is awarding $450 million in grants to ease port traffic jams. Major ports such as Los Angeles and Savannah, Georgia are eligible. A fourth of the money will be allocated to smaller ports. Congestion and inefficiencies at the biggest ports have strained U.S. supply chains during the pandemic. Auto parts supplier Tenneco is going private. Affiliates of Apollo Global Management will acquire the company in a $1.6 billion deal. That represents about a 100% premium to yesterday's closing price. Including debt, the deal has an enterprise value of $7.1 billion. Tenneco's stock price has plunged 85% over the last 5 years. And the European Union has unveiled new rules that will allow users to transfer data from products like Amazon's Alexa or a Tesla car. Cloud service companies will also be forced to make it easier to switch between providers. Companies say the rules could complicate international data flows. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This
is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into
compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
The only question is, how much will investors panic and liquidate? And we have seen redemptions the last few days. That, unfortunately, tragically, that's normal. Market drops, and as much as I'm saying, hey, it's a buying opportunity, people hit the panic button. And I suppose after today, we'll see inflows.
Andrew Sliman there, Senior Portfolio Manager at Morgan Stanley. Really a terrific 2021 for him. Not a surprise, but certainly his statistics show an ability to move higher and outperform the Standard & Poor's 500. Futures up 30, Dow futures up 202. VIX was at a stick, now 0.82, good points, 27.98. Lisa Bramwitz and Tom Keenan with us right now. Barry Ritholtz on what is required when pros speak on market pullbacks and all the language, correction, bear market, whatever. Barry, it is pros in search of catharsis. A number of our experts today said they really haven't seen blood on the streets, as the phrase goes. Do you buy the idea we need catharsis to move higher?
You need catharsis to move higher when you're in the midst of a generational sell-off. You know, October 02 or March 2009. Those catharsis technically translates as surrender, when holders just can't take the pain anymore, throw out the baby with the bathwater and surrender to the pain. This, a 10% pullback, you know, last year was aberrational. We didn't even get a 5% pullback. On average, we should see a 10% pullback every 18 months or so. This is what markets are supposed to do. They go up and
they
down.
correct as well. Now, Andrew Sliman of Morgan Stanley, who has a phenomenal track record over 36 months, Barry, makes real clear in green letters in his research note, this is a buying opportunity. How do you find and identify buying opportunities?
So I think a better approach for the average investor than relying on their instinct or their gut or what they read in on the sell side research or see on TV or hear on radio is to have a plan. And if you like the concept of buying the dip, well, you should have a plan to dollar cost average every paycheck or every month or however often you want to do it, so that as markets going up, you're just adding to winning positions. And as markets are coming down, you're buying things when they're cheaper. Every academic study that's been out there said that's much more effective than trying to go with your instinct or some sort of, methodology that you think is going to outperform the market. Very, very, very few people have been successful doing that. 2% of fund managers and traders. The average person, set and forget is a much better strategy.
All right, but let's say people are coming up with a strategy right now for the next couple of months, and I understand that there are people who have long-term kinds of capacities, but at this point, there is this short-term opportunity that some people say, given the fact that you've seen massive drawdowns in specific names in specific sectors, it's been so idiosyncratic in terms of which areas have been targeted. How do you determine when something is cheap or expensive? How much do you go to the specific sectors that have gotten beaten up the most?
So if you want to be a stock picker, and again, very few people are especially talented at that. In fact, we all know the bold-faced names because they are so rare, but you have to really understand not only why things are selling off, but understand what you may not know or what may still be somewhat random or unforeseeable when you're picking stocks. So, yeah, stocks like Peloton got cut in half. Did they run up so much because of the lack of access to gyms during the work from home pandemic era? Are you making the bet that we're going to have another variant that's going to send us back into lockdown and people are going to be buying Pelotons?
Yeah.
Or has their heyday come and gone? The same thing, you know, I think Tesla is a really interesting company, but a huge part of their run-up had to do with their entry into the S&P 500. Now that's there, are they really a $1 trillion company or close? Are you buying the dip and expecting a return to what was an aberrational issue? That's a really difficult question to answer. And hey, someone's got to be on the wrong side of the trade. There are two sides to every trade. Half the people will get it right, the other half will get it wrong. I can't answer you about certain companies because there's so many variables. Tell me when the next contagious variant comes out, and I'll tell you whether or not to buy Peloton here.
Barry, what are you doing right now?
Just the same thing we always do. We are.
Are you holding more cash?
No, absolutely not. We manage money for 1,600 families, nearly $3 billion in assets. And these are long-term. Most of it is taxable, but about 40% are qualified accounts. And this is for retirement, for generational wealth transfer, for philanthropy. Our clients think in terms of decades, not in terms of the next month or the next quarter.
Barry, thank you so much. These tumultuous times. Barry Ritholtz there, of course, writing for Bloomberg and Opinion, a hugely successful podcast as well. Lisa, I see a lift in the market, and I'm going to say it sustains. And I'm sorry, to me, given the mix of headlines from Rosalind Matheson's team on all of these governments, to me, dollar ruble is still the litmus paper of the moment. And to be above 80 shows some form a vote on the combined sanction announcements.
The interesting, I'm glad you pointed that out. You're seeing a weaker ruble, which seems to be suggesting that there is a successful isolation of Russia by Western allies. But you also see ongoing resilience in equities, which a lot of people have pointed to basically as an indication that a lot of these sanctions were not anywhere close to how bad people thought that they were. So if we get these headlines from the leaders of Ukraine and Poland and the like saying that they're expecting a lot more sanctions, will there be something to tip the boat and actually tip us back into being more concerned about a more dire situation, or if people basically moved on?
Well, I'm not even seeing one tranche of sanctions. Against tranche is the key word there, is stated by the Prime Minister, and I'm not assuming one or two tranches of sanctions. It may be a wide set given the actions of Mr. Putin.
You know, just stepping back, though, if you take a look at the slew of issues, they just add to the conundrum for the Federal Reserve. And I do go back to the central banks because ultimately people are counting on them to be able to stave off some of the inflationary inputs, including the oil prices that would be the main node of contagion here should things escalate further between Russia and Ukraine. And if you look at the inflation in wages, if you look at the inflation in some of these underlying components, they're not going down. And how much is that going to tip the hand regardless of what happens between Ukraine and Russia?
Let's set the morning for you. And again, Lisa, with that 5-year auction this afternoon, which will be very important. We've got a lift in the market, futures up 32, and the VIX, and I'm going to round it down to a stick, 27.87 is a far more constructive number than the 31 that we saw a number of days ago in the real angst. Yield curve, you know what? You've got flattening. There's no other way to put it here, not like it was 2 hours ago, but nevertheless, the 2-year yield dynamic versus the 10-year. Oil south 96.86 on Brent crude. And yes, the ruble as we move through the morning, 80.04, above 80 on Mr. Putin's ruble. Please stay with us. We drive forward the conversation with the former ambassador of the United Kingdom to the United States, Ambassador Westmacott, at 12 noon.
at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
From New York City.
Here in London, in Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics? As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have got a bounce here. Yields higher, equities higher. From New York City this morning, good morning, good morning. Equities up 0.7%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, the S&P entering correction.
Equities have already had a 10% correction, YTD.
There are a lot of cross currents for sure.
You have two distinct risk drivers.
We've got a geopolitical environment.
Tensions with Russia and the Ukraine.
But also what was going on before that.
The angst around the first Fed rate hike.
Central banks being behind the curve.
And the market has priced them in a very different way.
Boy, I'll tell you what, it's gonna remain volatile.
Risk assets can definitely grind lower from here. It's a read and react market. There's lots of potentially negative news flows. We're being very, very patient, very, very cautious.
The next couple of weeks are likely to continue to be very volatile.
You're still in a bend, haven't broken mode.
The only thing certain this year was uncertainty.
Joining us now is PIMCO's Erin Brown, BlackRock's Tony DeSpirito, and JP Morgan's Clinton Warren. Erin, I want to begin with you. Not every 10% correction is created equally. I want to understand from your perspective if this is one you buy or stay away from.
I think over the next couple of weeks, we're still going to be in a volatile period. So really timing the bottom is difficult. But I think when you step away and look at the fundamentals, the fundamental picture for equities is still quite strong. And I think, I've been somewhat heartened to see that the markets are not panicking. And when you look outside of equities, if you look at credit spreads, if you look at inflation swaps, if you look at 2s, 10s, they're still telling you that the fundamental picture for equities is still okay. And you are seeing fundamentals firming on the economic front. So I think over a medium-term perspective, you would do well buying here, but the next couple of weeks are going to continue to be choppy. And, certainly we could see downside risk from here.
Erin, given where 2s, 10s are, and you say that's the okay to carry on buying equities, do you think it is okay with 2s, 10s south of 40 now and heading in a direction where we go flatter, flatter, flatter?
Right. Well, I guess the point that I'm trying to make is that you haven't seen significant volatility. You haven't seen a significant flight to quality on the moves of late, particularly with regard to the geopolitical situation. I do think, though, that as we move later cycle and as the curve continues to flatten, it does start to, I think, bring up concerns regarding whether or not we're moving very late cycle and whether or not a recession is sort of knocking on the door for markets. I think we're too early yet to price that in, but certainly that is going to be a concern for markets as we move throughout this year.
Clinton, it's the back end story, the back end of 2022. This is something Mike Wilson of Morgan Stanley's been talking about. Here's the quote from him. We think Fed tightening is well understood at this point, even if it's not fully discounted in multiples. From here, the depth and duration of the ongoing correction will be determined primarily by the magnitude of the slowdown in the first half of 22 and looking out to the back end of next year. Your thoughts on that, Clinton? Your take at the moment?
Yeah, I mean, my position is don't fight or fear the Fed. I mean, rates are at such low rates that we have a lot of room to go before they become punitive. I'm saying if the Fed hikes 8 times, gets to 2%, we're still at a non-punitive track for equity markets. So I'm not fearful of the Fed moving, and I think some of this recent news with Russia and Ukraine will probably put pressure on the Fed to not go 50 basis points on March 16th and more like 25 basis points. But one of the things I am watching, to your earlier point, John, is that the curve is flattening, and I don't believe that we're going to have a yield inversion, but it does put some worry into my mind if the 10-year doesn't move. We need to get that 10-year move in, and hopefully with the Fed stop purchasing some of the longer-term bonds, we'll see the Fed move or the 10-year move up. But it's something that we're watching, and it is a risk to market.
Tony, I want to pick up on what Clinton just said. Don't fear the Fed. Let's talk about that. There are 3 ways of looking at this: the start of the journey, the speed, the destination. What matters here for you? The pace, how many rate hikes we get in this year, say, or the ultimate destination, how low that ultimate peak is?
It's clearly about what is the destination. I don't think the pace matters so much. Right now, the Fed is behind. It needs to catch up. It's achieved its goals. We have relatively full employment. Unemployment's at 4%. We've made up for historical undershoot of inflation. So I think that's good. So we're now at a point where the Fed can eliminate or move away from this extraordinarily accommodative policy it's had, the emergency policy that it's had. And so I think that's good. And then when I look at markets, I see 2 things. I look at fundamentals, which are still very strong. They're moderating from the pace that we were at last year, but earnings are still going up for the S&P 500, and valuations are down by about 10%. And so I see that as attractive. And ultimately, you look at where the 10 years today, 2%. It would take a 10-year of about 3 to 3.5% before I would no longer look at equities as the most attractive asset class.
150 basis points higher than where we are, Tony. Really? Why that high?
Yes. That's the math of our dividend discount model. We look at the historical equity risk premium. We look at the current equity risk premium, which is way higher than historical averages. And that's the number the model comes out with, and it makes sense based on long-term history. The stock market never fully incorporated ultra low rates. That's the punchline.
25 minutes away from the opening bound. The punchline this morning, equities up for now, up 0.7% after closing at 4-month lows in yesterday's session. With more on this, let's get to Taylor Riggs. Hey, Taylor.
John, it was a big day on the closing bell yesterday because we finally closed in correction territory on the S&P. We'd gotten there on an intraday level, but this was the first time since March of 2020 that we had closed sort of in that, quote, correction level. Now, sometimes this feels broad-based, but if you take a look at the 6 stocks that are accounting for 35% of the drawdown in the S&P 500 year to date, it is the big tech stocks, right? Microsoft, Facebook, Apple, those are the big draggers here on a year to date basis. And I just want to point out from the high in September, Facebook, it's off 47%. From the high in November, Microsoft is off 16%. So what that means from a sector levels, we brought it out a little bit, is communications, of course, already in a bear market. Those are off more than 20% from the recent highs. Healthcare, technology, discretionary also down more than 10% from the recent peak. So what that means, we brought it out, you've this big drawdown. But indeed, again, if you take a look at the terminal, the first time since March 2020 that you're really getting that full drawdown that we've had, closing levels at 10%.
Taylor Riggs, thank you very much. The team over at Citi looking at things like this, the US versus, say, Europe. Quote, an important driver for allocation decisions is growth and the evolution of US yields. A re-rating of growth higher leads to a style leadership rotation. Hence, investors reallocate more to global trade exposed Eurozone equities. Now, Erin, a lot of people piled onto that story week after week to start the year on this program. Then all of a sudden, we face a bit of a problem in Europe. Can you walk me through how you're approaching markets globally from region to region?
I think that Europe right now is still too early to buy, particularly with the geopolitical risks that, continue to loom over the market. And I think it's going to have a much bigger impact on European equities than it will certainly in the U.S., where, Russian exposure to U.S. equities is incredibly modest. It's, less than 1% from a revenue perspective. But there still remains risks to Europe, particularly with respect to the energy crisis. So while there's certain pockets of European equities, which I think look attractive, particularly the European banks, for the market overall, I think it's still too early to buy. And I'd be really focusing on quality bets in the U.S. as where to pick my spots for this year.
Tony, your thoughts on the same issue?
Yeah, so I still favor the U.S. market. It's a higher quality market. Obviously, there's less turmoil in the U.S. And so I still favor the U.S. Within the U.S., I think value equities look particularly attractive given the recent rise in inflation and subsequent rise in rates. That definitely favors value equities, and we've seen that play out this year.
Clinton Warren, final word.
Yeah, sorry to give you the trifecta, but I agree with both Tony and Erin. We are favored the U.S. From a geographical standpoint. Within the U.S., we're favored large cap over mid and small. And within U.S. large cap, we are favored the defensive sectors, cyclicals, dividend-paying stocks. So we like equities over bonds and cash. It's just going to be, you got to be a little more specific in where you're going, and high quality is where we are going for 2022.
We'll keep building on where you're going for 22. Clinton's staying with us alongside Erin and Tony. Your equity market positive 0.8%. Lucky to have Taylor Riggs with us for the hour. Taylor, looking at some moves this morning. Hey, Taylor.
Yeah, let's take a look at the pre-market. And John, a different story when we're taking a look at Lowe's versus Home Depot when we sat here exactly 24 hours ago, right? Because Home Depot was warning about some of the inflation and those supply chain costs. Lowe's is the opposite. They're actually saying, you know what, 2022 may not be so bad. They're looking at comps to be -1% to 1%, but it had seen comps as much as 3% lower. So you are getting a little bit of a marginal improvement. Take a look at Stellantis. Look, they're looking at operating income and positive industrial free cash flow. Analysts are saying it was much better than expectations, even for some of the big bulls on the street. Palo Alto is a really interesting one here because the cybersecurity company beating expectations and consensus. Stock now been raised to a neutral at JP Morgan, and Dan Ives at Wedbush seeing huge tailwinds here for the cybersecurity sector. Finally, we'll take a look, as you can see there, Activision Blizzard. Our chief gaming correspondent, Romain Bostic, says delaying these video games, it's not a good sign, John.
Is he a gamer?
He's more than a gamer than I am. Not sure that's
I did not know that. I don't think I've had a video game for about 30 years, maybe, Taylor. But OK, Taylor Riggs, thank you very much. Your equity market set up as follows, going into the opening bell about 20 minutes away. Just a bit of a bounce here. Coming up next, the US taking a measured approach to its debut set of sanctions.
We're implementing full blocking sanctions on two large Russian financial institutions, VEB and their military bank.
Do those sanctions lack teeth? That conversation up next.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open. Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
We're implementing full blocking sanctions on 2 large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russian sovereign debt. That means we've cut off Russia's government from Western financing.
President Biden imposing fresh sanctions against Russia while warning Americans about potential spillover effects here at home.
Defending freedom will have cost for us as well, and here at home. We need to be honest about that. My administration is using every tool at our disposal to protect American businesses and consumers from rising prices at the pump.
Joining us now is Anne-Marie down in D.C. Morning, Anne-Marie.
Good morning, John. We heard from the president there is tranche 1. That is what the administration is calling when it comes to these sanctions. And his deputy national security advisor for international economics, Dalip Singh, said yesterday that this is the beginning of an invasion. This is the beginning of our response, and they are prepared to take more action. And then a senior U.S. administrative official, Jonathan, said that potentially could be next up on the financial economic chopping block would be 2 larger banks, VTB and Sberbank. That would certainly hit a little bit closer to home to the Kremlin. By and large, this does just seem like a phase 1, Jonathan. This isn't the mother of all sanctions, and many are actually a little bit critical of the administration that this was just a little bit potentially too moderate in terms of what's going on right now with the conflict in Ukraine.
A language like the first tranche implies there's more to come. There's certainly more runway to escalate this. AMH, you catch up with the Ukrainian foreign minister a little bit later. What do they want to see?
They want to see more sanctions. The foreign minister, Dmytro Kuleba, said in the middle of the night today, and Jonathan, he's going to be addressing the UN General Assembly before I sit down with him, and he said we should be hitting Russia harder. Hit him now, hit him again, and he was talking about President Vladimir Putin. He stood next to Secretary of State Antony Blinken off the heels of a meeting he had with the president yesterday at the White House in the Oval Office and said he welcomed these sanctions, but more needs to be done.
Let's talk about the more that needs to be done, and the strategy too. One part of the broader strategy is to go after the people close to the president of Russia. Anne-Marie, I just wonder how you think that's actually going to play out, based on recent history, based on this week and how we saw that conversation go in that televised Security Council meeting, whether that actually makes a difference.
It's a great question. I think that is sometimes what individuals or those who look at the market implications of what could happen to Russia fail to recognize, that if you don't look at the economics of it, right? Because President Vladimir Putin doesn't seem to be deterred all the time by the economics. Jonathan, I know you know this story very well. And this was years back when President Vladimir Putin went and visited a factory and all the bosses of a factory, and he says, you all need to fix this. And he had every single one of them sign it. And then he said to billionaire Oleg Deripaska, a billionaire very close to the Kremlin at the time, I don't see your signature. He said, come over here, had him get up. It was quite embarrassing for Oleg Deripaska, signed the paper, and as he walked away, he said, give me back my pen. This is how President Vladimir Putin treats those around him. So if you're going to sanction them, I don't think it's going to make much of a difference because I don't think President Putin cares.
AMH, thank you. I'm really looking forward to your conversation here in New York with the Ukrainian Foreign Minister a little bit later this afternoon, live on Bloomberg TV and on Bloomberg Radio, 3:30 Eastern Time. The geopolitical tensions have been a key theme for this programme over the last few weeks. We caught up with Kathy Jones of Charles Schwab just yesterday, weighing in.
It just confirmed, I think, our view that this Fed is likely to move more slowly than consensus estimates. It just confirmed that I think the market had gotten way ahead of itself in terms of expecting Fed rate hikes. And now we have this heightened political risk that's going to mean potentially tighter financial conditions. And that means a slower process of rate increases from the Fed. And
Erin, you could possibly look at this two ways. It might make the Fed go quicker. If we get an energy price spike, it might make them go slower. How do you think it's going to influence the decision next month?
Well, I think with regards to next month, Clinton's right, which is the Fed is very unlikely to move in excess of 25 basis point at the March meeting. I think that they're going to be gradual in their approach to removing accommodation. And remember, they're still balancing quantitative tightening, which will likely start later this year, with rate hikes. And so I think they're going to want to be gradual in their approach. So they don't, have a hiccup in terms of the removal of accommodation. That said, they'll likely hike 5 to 6 times this year, and it will be a meeting-by-meeting decision, and likely they'll move on a meeting-to-meeting basis. But I think with regards to March, we're really looking at 25 basis points.
Clinton, you say don't fear the Fed. Let's go with Bank of America's number. 7 hikes this year, $1 trillion of balance sheet reduction in 22, another $1 trillion in 23. Do you not fear that?
Well, I mean, what I fear is how quickly the market's changed its expectations. I mean, just a few months ago, the market was pricing in 1 Fed hike for 2022, and now we're sitting at 6 to 7, depending on who you're talking to across Wall Street. So that is something to be concerned about. But you've seen the movement in fixed income markets already move. And what we're telling clients is to prepare for what's going to happen. So how are you going to defend your portfolio in this period of rising rates? And what are you going to do? And we're moving clients to inflation hedge portfolios and infrastructure, private credit, et cetera, to try to get some sort of yield and to protect the fixed income part of the portfolio. But yeah, there's something to think about, but I'm not scared about it because I don't think it's going to be punitive to equity markets until we see the Fed funds rate get to 2, 2.5. And to like the other guest was saying, the 10-year spike up to a lot higher level.
Tony, we're seeing some headlines from David Solomon of Goldman. Goldman has shown that it can grow its book value, won't replicate the 21 capital markets results in 22, but for 22, there's some appetite here, Tony. As you point out in your note, financials haven't been loved since the financial crisis, but we see a lot to like. What do you like, Tony?
It's really 2 things. One is earnings growth. Banks are interest rate sensitive. They're the only area of the economy really that directly benefits from rising short-term rates. And we can debate where we ultimately end, but without a doubt, that's the direction we're moving in. And that's good in general for bank earnings. Credit remains good. The economy continues to hum along. So I see credit as very benign. And then I always come back to the balance sheets of the banks. These balance sheets are ironclad. They are better than they've been really at any point in history. And that's obviously regulatorily driven, but that makes them safer and sounder. And they've really gotten no credit for that increase in safety and soundness.
Tony, when you look at what the market cares about and what ultimately matters to profits, sometimes there's some daylight between the two. You mentioned the front end. The front end drives profitability, but it's seemingly the 10-year which shapes investor appetite for the financials. Tony, is that still the case, and what do you make of that?
Yeah, so you're right. It's the short end that drives earnings. The long end is really a reflection of the market's view of the economy, right? And as the yield curve flattens, there's a sense that the market is telling you that we're getting closer to a recession. But I think it's really hard to read any data from the long-term Treasury at this point because the Fed is still in the market buying, right? So we have an artificial long-term Treasury at this point. And so I see as tapering begins, the potential for that 10-year to rise some more, and that'll create a steeper yield curve. And so I think you have to watch the economy, and it's less about long-term rates, it's about short-term rates, and it's about long-term economic fundamentals.
Clinton, where did the banks fit into your asset allocation decisions this year?
Yeah, I mean, we've liked banks for a while. A lot of the story was steepening yield curve, credit reserve releases back as banks overtook reserves. So we like financials. However, we like cyclicals and utilities a little bit more. I just want to get back to one other point, though, regarding the Fed. Like, my concern is if we had a normal recession right now, like, what tools does the Fed have? We have to get off of this point of stimulus, and they have to get to a more normalized environment where you can earn some yield checking account, you can earn some yield in CDs. So I'm looking forward to a more normal environment. And if we have a recession in 2024, 2025, wherever, the Fed has some ammunition to get us out of it.
Clinton Warren, the conversation continues with Tony DeSpirito and Aaron Brown. Coming up on the programme, the morning calls, and later, Meta falling nearly 50% from a September high. More on Facebook still ahead. From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Five minutes away from the opening bell in New York City, correction territory at the close in yesterday's session on the S&P, down 10% from that January 3rd high. At the moment, a bounce back on the S&P, the Nasdaq, the Russell, the S&P up by 0.8%. Yields bouncing back too in the last 24 hours. Look at this. Yields up at the front end by 4 basis points, on 10s by 3. The curve just a little flatter here. The distance between 2s and 10s narrower. That's one to watch as we approach the first rate hike of the Fed. We're not there yet. That's the price action here in the morning calls. Let's kick things off with Raymond James, upgrading Intel to market perform without a price target. Seeing limited room for further downside following its recent declines. That stock is up by about 1% to 45.20. Deutsche Bank downgrading Rockspace to a hold, expecting margins to remain under pressure following its quarterly results. That stock is down and down hard. And finally, Piper Sandler upgrading Marathon Oil to overweight, highlighting its strengthening balance sheet and favourable macro backdrop. That stock up by almost 2%. Coming up, a rough February for big tech. Facebook raising nearly half its value in just 5 months. That conversation just around the corner. From New York City, this is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
25 seconds away from the opening bell this morning. Good morning. This Wednesday morning, a bounce. Can we call this a quieter one? For now we can. Up 30 on the S&P, advancing 0.7%. Onto the Nasdaq, up almost 130, up by 0.9%. From New York City, with your opening bell ringing right now, switch up the board and get to the bond market. Your 10-year yield, a little bit higher today, up 3 basis points. The curve just a little bit flatter, 196.51 on 10s. The Fed speak today, led by President Daly. I'll get to the trading diary a little bit later in the programme. Crude backs away, 1/3% and 91.63. Euro dollar backs up for the US dollar. The euro side of things is stronger, 113.41. We're up there by a little more than 1/10%. That's the cross-asset price action with some moves around the open. Back with us, here's Taylor.
John, we talked about the stock a little bit earlier, and it's continuing to move now that we're getting the opening bell. So take a look at shares of Stellantis. Look a little bit better than expected outlook. Analysts are saying that even for bulls on the street, that this was a better print here, targeting double-digit adjusted operating income and positive industrial free cash flow. Also in the auto industry, Tenneco, not something that we talk a lot about, but a $7.2 billion enterprise value deal underway. This is a company that designs, manufactures emissions control and ride control products for the auto industry. Activision Blizzard, again, our chief gaming correspondent, Romain Bostic, says that delaying games is never a good sign. Change up the board. Let's go broader out. to some of the big tech companies that we're talking about, because I know that you're going to talk a lot about Facebook, but this is a stock, John, that is down 47% from the peak in September and about 40% this year alone. So it is nowhere near a $300 stock that we had earlier this year. As you can see there, you're at a $200 stock. Apple, again, off 10% from the peak in January. Amazon, similar story, off 20% from last July's highs. So here you're trying to get a little bit of a bounce, but we have a long ways to go.
Some of the single name destruction has been absolutely terrifying for the likes of Meta and Facebook. Taylor, thank you. Looking forward to the programme after the close a little bit later with Taylor Riggs, Caroline Hyde and Romain Bostic. Bank of America and Savita Subramanian breaking it down like this. Here's the quote. The fate of tech is far more important for the S&P than geopolitics. The S&P's direct exposure to Russian sales is 0.1%. But information technology and communication services are close to record weights of 37%. Back with us, Erin Brown, Tony DeSpirito, Clinton Warren. Tony, we've done some real destruction in big tech for some big names. Meta, we mentioned a few times this morning already, down almost 50% from the highs back in September. How do you approach that scenario, that situation, Tony, at the moment?
Yeah, so it's not just the big tech names. It's also the smaller cap, innovative, disruptive companies actually have been in a bear market since the beginning of last year. If you looked in 2021 at the small cap indices, value versus growth, the small cap value index beat the small cap growth index by 25 percentage points. So there's a real bear market going on there. And so it's certainly time for investors to start picking through the wreckage. Now, there are some companies that deserve to be in that wreckage. I'll call them publicly traded business plans. And that was part of some of the froth we saw with very easy money. But there's some really great companies that are growing fast. They're disrupting industries, and they're going to become highly valued. That's an opportunity for stock pickers to go looking through the wreckage there.
Tony, I understand the reluctance to name them, but can you describe them? Just give us a better idea of how you find them.
Yeah. So one is, like I said, you don't want to be buying business plans. You want to buy companies that actually have real profits and are growing those profits. You want to look for disruptors and companies that are disrupting big profit pools. Those are the kinds of companies you want to go after. And what you want to do is you want to have a long-term view so that in 3 to 5 years from now, they start to look like they're attractively valued. Those are the kinds of companies that you want to go after.
Erin, this is the biggest challenge for the headline index, isn't it? At the headline level. What happens to that massive grouping of mega cap US stocks?
I think that's right. I mean, the tech sector is 37% of the revenues for the market, and so that is going to be a significant driver for the S&P 500 going forward. We've had a really dramatic move in real yields over the last few months. It's been about 70 basis point move higher in real yields, and so that is going to take the froth out of unprofitable companies, and so you've seen that really happen in much of the growth index. But I do think that when you take a step back and you look at profitable tech, large cap tech that has real earnings, real cash flows, we're getting to levels here where they are very attractive to buy if you have a medium-term horizon. And so I do think that as we move past the Fed event in mid-March, and the market becomes a little bit calmer about what the Fed intentions are in terms of the pace of the removal of accommodation, I do think that you will start to see money flow back into large cap tech and particularly profitable tech sectors.
And potentially flow away from energy, which is where the big story's been, up more than 20% year to date on that segment, that industry group. Tony, that doesn't move the dial for the headline index. For the S&P, the weightings of energy, just looking at the Bloomberg right now, the member weightings on an industry basis, 3.5%. But that's where the massive gains have been, Tony. You've made the point, and I think it's an important one, that ironically ESG issues have actually helped that segment, not hurt it. Tony, why?
Well, so it's two issues. It's not just ESG, but one issue has been that oil has been in a recession since 2014, right? We overbuilt, we spent too much money on CapEx, and therefore oil prices dropped and companies stopped spending. And there's a long-term memory there that tells that investors are telling companies, don't invest, give us back the cash. So that's part of the story. That's constricting supply. Then you add on to that sustainability concerns, right? The fact that we know that there is an eventual end to oil consumption. I think there's a debate about the time frame but we know that there's an eventual end. And again, that tells companies stop spending. The combined result is, we've seen supply contraction like never before. We're at an all-time low for new discoveries this year. And oil is a commodity, and it's all about supply demand. We have demand recovering off off pandemic lows, and then we have a very constrained supply situation. That results in high oil prices, and that's good for energy companies. And that's what's been driving these companies. It's not so much multiples, it's much more about earnings.
Clinton, I want to give you the final word just on energy, the final word.
Yeah, I mean, unfortunately, clients are underallocated to the energy complex. If you look at portfolios, and they haven't been able to benefit from some of the recent gains that you're talking about. Being here in Dallas, we have a lot of clients that are owners and operators throughout the energy sector, and unfortunately, we have not seen a lot of rig count increases. So to Tony's point, supply has not picked up, and I would have thought at these levels that would have been a reason for more companies to step in, but we haven't seen it yet. To Tony's other point, demand will pick up as the markets open up. And I will say it is an interesting segment to be on. We haven't talked about the pandemic, so hopefully that's behind us as we reopen and demand continues to go. But unfortunately, clients aren't as exposed to energy and haven't benefited from these recent returns.
I get abuse every time I bring up the pandemic, Clinton. That's why we avoid it. That's not really why. But it's good news we avoid it now. The equity market up 0.7% on the S&P, the Nasdaq up 0.8%. 7 or 8 minutes into the session, the retailers closing out earnings season. This is what we heard from the Lowe's CEO, Marvin Ellison, said the following: "We remain confident in the long-term strength of the home improvement market and our ability to expand operating margins." The latter point, Kaylee Lyons, the important point.
Yeah, that's the critical point, John, because this is a very different story for Lowe's than it was for their rival Home Depot yesterday, where concern around disappointing margins actually took that stock down for the worst day since 2020. Lowe's, on the other hand, after a beat and raise quarter, beating on the margin front, is higher by the better part of 4%. So it seems to be faring better on productivity and profitability than Home Depot is. And as for the other retailers that reported this morning, Overstock.com is absolutely soaring, up 34% on, you guessed it, better than expected margin as well as profit. But it's a move to the downside for TJX, lower by about 6.5%. It missed expectations, said it won't provide full year earnings guidance given the uncertainty around how long elevated expense pressures may persist. So that's the point of the story, John. It all comes down to those cost pressures and the ability to pass on those costs. That all said, it does seem like this may be the low bar for margins at this point. It may be the low watermark. Margins are expected to expand, according to BI, throughout the remainder of the year from the 6.2 level they have shrunk to at the moment. That outlook, though, has not done much to aid sentiment for the group as a whole, John. The discretionary sector is still the second worst performing in the S&P 500 this year. It's lagging the broader index with a decline of more than 14%. Only communication services has fared just fractionally worse year to date, John.
Let's work through this issue together. And Kelly, thank you, by the way. Erin Brown, when you look at the step up that Kelly Lyons just painted for us, that picture for 2022, how much faith do you have in the step up, the improvement for margins as the year progresses?
I think it really comes down to which companies and which sectors you're talking about. And we heard this through the fourth quarter earnings season, where some companies are really seeing the ability to be able to take margins higher and be able to pass through those costs to the end consumer. Where we're starting to see pressure and real differentiation, though, is in the lower end consumer, which is getting squeezed from the end of the child tax credit and from the end of stimulus payments. And as a result is having a little bit of pushback now with respect to higher costs. And so you're really going to start to see this play out in markets this year, where I think, particularly in the consumer sector, those consumer companies that are exposed to the higher end consumer are going to be able to continue to show strong profitability and margin expansion. Whereas those that are, really exposed more to the lower end consumer, I think are going to start to have trouble in terms of passing through that pricing.
Clinton, would you break it down in the same way?
Yeah, I mean, throughout 2021, a lot of the clients that we have at JP Morgan, they saw an increased amount of cost, labor, inputs, et cetera, and they were able to pass it on to the end consumer. However, you're starting to see that kind of break down in 2022 as prices have skyrocketed and consumers are starting to move with their feet. So I think a lot of people have not priced in the margin compression that we're going to see in 2022, which will lead to muted returns and lower earnings than I think a lot of people have previously expected.
Tony, final word on margins. The final word's yours.
Yeah, so I have two perspectives. One's a macro and one's a micro. On a macro perspective, we have two forces. One is operating leverage, right? Revenue is very strong. That implies good operating leverage. That usually expands margins. On the flip side, costs are rising. And so those are the two competing forces. And we see them at least balancing each other, maybe some actually upside to margins because the operating leverage is so strong. On a company-specific basis, it's all about pricing power. Does the company have pricing power to pass along the rising costs? And so that's very much an individual stock selection issue. I think there's an increasing opportunity in companies that can pass it along, but with a lag. And so we're looking through companies where we've seen margin squeezes to say, okay, is this temporary or is this more permanent? And we're trying to take advantage of the companies where we see it as being temporary. So I think that's the task ahead for stock pickers.
Some issues we can work through throughout the whole of 22. Tony, thank you, as always. Tony DeSpirito, Erin Brown and Clinton Warren, thank you very much to the three of you. About 12 minutes into the session here this Wednesday, up 0.6% on the S&P and the Nasdaq up 0.8%. Up next, coming up, the White House taking new measures to tackle supply chain issues.
Almost exactly a year ago, I issued an executive order to prioritize strengthening our domestic supply chain.
That's next. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Almost exactly a year ago, I issued an executive order to prioritize strengthening our domestic supply chain. If I was going to follow through on my commitment to say we were going to make it in America and build it in America, we needed a supply chain that was reliable.
President Biden focusing on supply chains, with the administration announcing fresh measures to ease congestion. The Transportation Secretary, Pete Buttigieg, saying this: "We're proud to announce this funding to help ports improve their infrastructure, to get goods moving more efficiently and help keep costs under control for American families." Emily Wilkins with us now from D.C. Emily, the big effort continues.
Yes, I mean, we're seeing this $450 million grant being announced today. Now, granted, that's not actually going to be, money's not going to actually be going to ports until later in the year. But this is a part of President Joe Biden's push to make sure that the U.S. is addressing supply chain bottlenecks to try and bring inflation back down. Remember, President Biden last year visited a number of ports, was trying to encourage them to go 24/7, giving them the resources to do that, really trying to move stuff along. This is just another part of that effort. And it really speaks to the fact that Biden and Democrats understand that these supply chain backlogs, as well as inflation, is a major problem for them now, is a major problem for a number of Americans. And if it doesn't get addressed by the end of the year, could wind up really hurting the chances for Democrats to hold on to the House and the Senate in the midterm.
It's been a big challenge for corporate America as well. Emily, thank you. We've got to leave it there. Emily Wilkins. Carrier Global just had their Investor Day. I'm pleased to say that joining us first here on Bloomberg this morning is the Carrier Global Chairman and CEO, David Gitlin. David, great to catch up with you, sir. Let's just start right here. 2 years as an independent company, this year outside of United Technology. Has that independence given you an advantage to tackle issues like the one we're talking about on programs like this every single day?
100%, Jonathan. Thanks for having me this morning. Yeah, you know, the spin from UTC has been a complete new lease on life for Carrier. We think of ourselves as a 100-year-old startup. Willis Carrier invented modern air conditioning more than a century ago, but we have the energy and the focus of a startup. So we've been very focused on growth, margin expansion, and really cleaning up our balance sheet so we can play offense on M&A, and we've done all of those. Last year, we grew 15%. This year, we're going to grow another high single digits. Last year, we expanded margins 80 bips. This year, another 75 bips is what we expect. And when we spun from UTC less than 2 years ago, we had $10 billion of net debt. Today, we sit here, we have less than $4 billion of net debt. So we're playing offense on M&A. We announced the acquisition of Toshiba's HVAC business. We increased our dividend 25% this year. We announced the $1.6 billion buyback program, and we have more firepower to continue to play offense on M&A.
So, Dave, let's talk about that offense then. Debt load down, offense on M&A, and you mentioned the capital returns plan too. Can you walk me through how you balance the two? When you think about that extra money you've got, it's reduce the debt, the balance between capital returns, M&A, and investing in the company.
Well, our debt's now in great shape. You know, our multiple went from 3.5 debt to EBITDA. We're now close to, we're about 2. So in terms of our investment grade and our debt, we're in a great situation. We've increased the dividend 25%. We've said that our priorities in order are organic growth, inorganic growth, and we will continuously look at dividends and share buybacks. So it's always a balance. We're really focused. We've increased our pipeline on M&A. There's a lot of opportunities out there, but we will be patient. And we know that the right deal on the right terms at the right time can create a lot of value. But we'll be patient. We'll be focused. And if the right deals don't come along, we'll increase our buyback program.
Dave, as you know, demand is there, but meeting that demand is expensive. As you look across 3 buckets right now, let's pick 3. We can talk about logistics, raw materials, and labor. Are you happy to say you've seen the worst in any of them?
Well, in some respects, well, yes, in the sense that what we've assumed for 2022 is that the very high inflation that we saw in 4Q, it continues through the rest of the year. And we've seen it in all of those buckets. Logistics costs remain very, very high. Just getting cargo from Shanghai to LA has been expensive for a long time, and it remains expensive. And we've assumed that it stays at very elevated levels for the rest of the year. Raw material, we're hedged about 70% on copper, steel, and aluminum. So I think we're balanced in terms of where those are, but they're at elevated levels. We assume they stay at those elevated levels for the rest of the year. Labor is primarily a challenge in the United States. So we've had to take some discrete actions, but we think we're calibrated on that. And the rest of the year, I think for the rest of the world, I think we're fairly calibrated and managed there.
Dave, lift the lid on that just a little bit more. It's on page 5 of your Investor Day presentation. It just breaks down the key data points for the company. Really simple stuff. 58,000 employees, 160 plus countries. You just mentioned there, Dave, the labour issue was focused in the US. That's where it's concentrated. Is this not a global story for you? It's very much a US one.
It is. It is right now. I mean, actually, more than 70% of our employees are actually outside the United States. But where we've seen the biggest attrition and some of the retention issues have been in the United States for a whole host of reasons. But it's been coming down. Some of the attrition levels have been coming down. Attrition, some of the attrition issues related to COVID have now gotten to very low levels. So that's very encouraging news. But, we've been working with our workforce in the United States. We've been adding a lot of jobs in the United States. We've been adding engineering. We've been significantly adding salespeople and digital. So a lot of great high-paid jobs in the United States. But I will tell you that attrition and retention issues do remain a challenge here.
Slide 11 was a slide that jumped out for me. And forgive me for going through slide by slide here. But, Dave, just on the cold chain transformation, it's pretty obvious to me that you're not just a victim of the supply chain, you actually benefit from it as well. Are you seeing people put more money, invest more into the supply chain, not just wait for things to unclog, but invest more in it, that you're benefiting from that trend too?
Oh, 100%. You look at what we do is cold chain distribution, and 50% of vaccines, they never get administered, in part due to issues with the cold chain. 1/3 of all the world's food that gets produced never gets consumed, in part because of issues associated with the supply chain. So companies are willing to spend more to improve the efficacy and prevent any of these excursions that happen. They're a big deal, on a human level. They're a big deal on a financial level. They're a big deal on a sustainability level. If you look at all of the energy that goes into producing food that never gets consumed, if food waste were a country, it would be the 3rd largest emitter of greenhouse gases.
Dave, those numbers
yes,
are nuts.
Companies willing to spend more. Yeah,
they are nuts. And I want to finish on this, though, the calendar. You mentioned that at some point you have to decide between making an acquisition or handing that money back over to investors. For 22, where on the calendar do you make that decision?
We'll be balanced as we go through the year. There's no set point in time, Jonathan. We closed on a divestiture just a month ago. So we have plenty of cash on the balance sheet. We're looking at acquisitions now, and we'll continue to play that out as we go through this year into next year.
Hey, Dave, wonderful to catch up. Let's catch up again soon. Fantastic stuff. Dave Gitlin there, the chairman and CEO of Carrier. Almost called him the Charrier. Anyway, coming up, the market-moving events you need to be watching. That'll be next in our Trading Diaries. From New York, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
I was just reminded the most bearish price target on the S&P for year-end, Morgan Stanley, 4,400 on the S&P right now, 4,320. just south of that. Right now up 1/3 of 1%. The bounce fades a bit on the Nasdaq, up 1/3 of 1% as well. That's the sector price action. Let's talk about an equity market that looks like this, and a bond market that takes shapes as follows. Yields on 10s right now. Going to show them? There we are, 198.95. On 2s, 159.76. Here's your trading diary. The US Treasury auctioning $53 billion of 5-year notes at 1 p.m. San Francisco Fed President Mary Daly speaks at 3:30. GDP on Thursday, more Fed speak. Barkin, Bostic, Mester, Daly and Waller. And finally closing out the week with some spending data. From New York, this was the countdown to the open. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look. in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
I won! Look for the winning number in Sari Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the US.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010 after staying for almost 1 year in the hospital. He died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus, and I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking, the bus was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was a native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
the threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, 1 kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At 1 kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option, it would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000!
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter. It's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
The Fidelities and the Schwabs and the E-Trades of the world, they look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and as it releases more products, come along.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that The younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just attacked that video and were like, you explain things so much better than my boyfriend or my professor, or I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
the GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
Usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home, but in rural areas it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The US connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Attention! Stand. Granted. Attention. Granted. Attention.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation. And language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
refer to the dictionary also, okay, and find out the new meanings, as well as describe about. Hey Richita, how are you? Hi Sindhu, fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I am a Swero, I want to be a very good actor or a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidodi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities, and most of them got institutionalized now. So, for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change all that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university, and then I faced worst form of discrimination in the universities. Like there were in those days I'm talking about. So the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand, and then again try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park, and inside this greenhouse it's a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the garden city feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. You have to make sure that no combustion engines will be in the city in the middle and the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore, if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like, I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ads at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising, so because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year, because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button, and that helps support the channel. And then the third aspect to that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an automod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet! I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read, and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience, and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking, and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point, because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while, and I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Thea and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G, and it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice: nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology, and live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够
很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高。但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
里面有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是你一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. And they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows, and we see like P&G have their own sales room which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers, and it enables a lot of players to actually sell.
And live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。
接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Pelamis Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back and forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate. And that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably have noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters of Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming in to our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Inna Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1986, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Inna wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
Solar and wind energy were fully commercialized. There were a lot of amazing technologies implemented everywhere. I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded EcoWave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station.
This is the EcoWave Power conversion unit that has been operating in Jaffa port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100 kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Inna and her team are working on another 100 kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
Shout at me. So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you act for Nissan. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Pasi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in Nissan for 16 years.
So Rav Pasi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn. And he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Pasi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, you know, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to a jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Passi was tasked with investigating Carlos Ghosn. And he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
Yeah, it's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian.
Hello, Mr. Hari.
And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Passi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point we reported into him. You know, at the time everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon. I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered for me the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, you know, again, with hindsight, people must have thought that this is the nail that's sticking out and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the GOAN Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually he lost, you know, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was at around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, you know, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search and of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who'd spent 16 years at the company.
There's no one else at our door.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed. Which, again, I just couldn't understand. What is the point of doing that? This is a car company. This is not the KGB.
I think it's fair to say that Rav Pasi didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Harinata is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly, but in terms of being able to sleep at night, I think he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera to me.
It's a very sad thing.
It's a family feud.
A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against JP Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more, when I saw that money was going, and I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with JP Morgan letterhead, and just started sitting at the kitchen table, just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
You know, Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to JP Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, they were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place, the granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door. And he's screaming about what was sent to the JP Morgan. They're now investigating them. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed, the phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in JP Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. Over the course of their time with JP Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as JP Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from JP Morgan. They issued an award of about $19 million. I reached out for comment, and JP Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son Bobby wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance and asking for forgiveness from my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. Seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, and at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s. When everyone had a nickname, his was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, hundreds of thousands and millions of dollar trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. They didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his oil and gas pit was described to us as amongst the top 3. In amongst that, was very successful and made very large amounts of money as a young man. But inevitably, mechanisation and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s and they're his, drinking buddy's son, or they're his own kids' friends from football. They're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to, to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. Not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Theydon Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. Anyone that covers markets is going to be surprised about that. You're thinking your BPs of the world or your Glencores, but it's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there have been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil's going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. They are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m, that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small
office. It was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks, and you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. And the law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day, they all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they'd done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had has kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. You know, potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, and you know, in the most extreme cases there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. You know, one obvious one is going to be they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That, you know, they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that, you know, we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero. Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. And this surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues. And they've been around for 7 decades. They've preserved about 125 million acres of land. And they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2, 3, 4.
If you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they have done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that the carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves, because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system. And you end up in sort of a race to the bottom. And that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, you know, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, you know, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. You know, we're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. You know, we need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
the Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
This is a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes! It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is, is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial, be like a sports car. Yes! We got up to about 108 miles an hour on that test. And it's a short run, it's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was like, is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving, and most importantly, they've probably gotten off of one before, they've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment, to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But there's people that have the ability, the fortitude to stick it out, to see the game-changing platform here. Those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single super city economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network that in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we have developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. I think in that sense the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think is a redeeming aspect in the business. People is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have time grind details, and I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utility firm